Question 1. In Kentucky, which of the following is true about the personal liability coverage ECA homeowners insurance policy? A. Personal liability coverage in a homeowner's insurance policy provides protection against lawsuits related to bodily injury or property damage caused by the insured's negligence on their property. B. Personal liability coverage in a homeowner's insurance policy only covers injuries and damages that occur off the insured's property. C. Personal liability coverage is optional and must be purchased separately from the homeowner's insurance policy. D. Personal liability coverage in a homeowner's insurance policy excludes coverage for intentional acts or damages caused by pets. Correct answer A. Personal liability coverage in a homeowner's insurance policy provides protection against lawsuits related to bodily injury or property damage caused by the insured's negligence on their property. Explanation. Personal liability coverage in a homeowner's insurance policy protects the insured against financial loss from lawsuits related to bodily injury or property damage that they are legally liable for. This includes incidents occurring on the insured's property due to their negligence. It does not cover intentional acts or damages caused by pets in all cases, but it generally covers unintentional injuries and property damage. Option B is incorrect because personal liability coverage includes both on and off-premises incidents, not just off-premises. Option C is incorrect as personal liability coverage is typically included in standard homeowners insurance policies, not sold separately. Option D is incorrect because coverage for damages caused by pets can vary by policy and may be covered under certain endorsements. Question 2. Under Kentucky's personal auto policy PAP, which of the following accurately describes the uninsured motorist coverage? A. It provides coverage for damage to the insured's vehicle caused by an uninsured driver regardless of fault. B. It covers bodily injury and property damage caused by an uninsured driver when the insured is not at fault. C. It covers only medical expenses for the insured and passengers if the at-fault driver is uninsured. D. It provides additional coverage beyond the limits of the insured's primary auto insurance for accidents involving uninsured drivers. Correct answer. B. It covers bodily injury and property damage caused by an uninsured driver when the insured is not at fault. Explanation. Uninsured motorist coverage in Kentucky provides protection for bodily injury and property damage that the insured incurs when the at-fault driver does not have insurance. It ensures that the insured can recover damages even if the responsible driver is uninsured and at fault. Option A is incorrect because coverage does not cover damage to the insured's vehicle, but rather bodily injury and property damage. Option C is incorrect because coverage encompasses both bodily injury and property damage, not just medical expenses. Option D is incorrect as coverage is not additional but rather replaces the lack of coverage from an uninsured driver. Question 3. Tom, a homeowner in Kentucky, has a dwelling policy DEPA 2 with coverage limits of $150,000 for the dwelling, $15,000 for other structures, and $10,000 for personal property. After severe storm, Tom's dwelling sustains $120,000 in damage, his detached garage incurs $14,000 in damage, and he experiences $8,000 in personal property losses. Additionally, Tom incurs $5,000 in loss of use expenses. How much will Tom's policy pay in total considering the coverage limits and any applicable endorsements? A. $120,000 for dwelling damage, $14,000 for other structures, $8,000 for personal property, and $5,000 for loss of use, totaling $147,000. B. $120,000 for dwelling damage, $15,000 for other structures, $8,000 for personal property, and $5,000 for loss of use, totaling $148,000. C. $150,000 for dwelling damage, $15,000 for other structures, $10,000 for personal property, and $5,000 for loss of use, totaling $180,000. D. $120,000 for dwelling damage, $15,000 for other structures, $10,000 for personal property, and $5,000 for loss of use, totaling $150,000. Correct answer. B. $120,000 for dwelling damage, $15,000 for other structures, $8,000 for personal property, and $5,000 for loss of use, totaling $148,000. Explanation. The DEPA 2 broad form dwelling policy covers dwelling coverage, $120,000 within the $150,000 limit. Other structures coverage, $14,000 up to the $15,000 limit. Personal property coverage, $8,000 within the $10,000 limit. Loss of use coverage, $5,000 assuming it is within the policy limit. Thus, the total payout is $120,000 dwelling plus $15,000 other structures plus $8,000 personal property plus $5,000 loss of equals $148,000. Question 4. In Kentucky, what is the primary difference between an HO3 homeowners insurance policy and an HO5 policy? A. The HO3 policy covers the dwelling on a named perils basis and personal property on an open perils basis, while the HO5 policy covers both dwelling and personal property on an open perils basis. B. The HO3 policy provides coverage only for named perils, whereas the HO5 policy provides coverage for open perils for both dwelling and personal property. C. The HO3 policy provides no coverage for personal property, whereas the HO5 policy includes personal property coverage on an open perils basis. D. The HO3 policy includes broader coverage for liability claims, while the HO5 policy has more limited liability coverage. Correct answer A. The HO3 policy covers the dwelling on a named perils basis and personal property on an open perils basis, while the HO5 policy covers both dwelling and personal property on an open perils basis. Explanation. The HO3 special form homeowners insurance policy provides open perils coverage for the dwelling, meaning it covers all risks except those specifically excluded, and named perils coverage for personal property, meaning it covers only the risks specifically listed in the policy. On the other hand, the HO5 comprehensive form homeowners insurance policy offers open perils coverage for both the dwelling and personal property, providing broader protection compared to the HO3 policy. Option B is incorrect because the HO3 provides open perils coverage for the dwelling, not named perils, and the HO5 policy covers both dwelling and personal property on an open perils basis. Option C is incorrect as the HO3 does include personal property coverage but on a named perils basis. Option D is incorrect because liability coverage is generally similar in both forms with differences mainly in property coverage. Question 5. In Kentucky, which of the following accurately describes the purpose and function of umbrella insurance in personal lines coverage? A. Umbrella insurance provides additional coverage above and beyond the limits of primary auto and homeowners insurance policies, including coverage for certain risks not covered by primary policies. B. Umbrella insurance serves as a substitute for primary insurance policies by offering comprehensive coverage for all personal risks, including health and auto. C. Umbrella insurance exclusively covers damages related to property loss and does not provide liability coverage for personal injury claims. D. Umbrella insurance is designed to cover only legal defense costs associated with liability claims, excluding any settlement or judgment amounts. Correct answer A. Umbrella insurance provides additional coverage above and beyond the limits of primary auto and homeowners insurance policies, including coverage for certain risks not covered by primary policies. Explanation. Umbrella insurance is designed to provide an extra layer of liability protection above the limits of underlying primary policies, such as auto and homeowners insurance. It also offers coverage for certain risks that may not be covered by these primary policies, such as slander or defamation. It is not a substitute for primary insurance, but an enhancement that provides additional financial security. Option B is incorrect because umbrella insurance does not replace primary policies but adds additional coverage above their limits. Option C is incorrect as umbrella insurance provides liability coverage including personal injury claims, not just property loss. Option D is incorrect because umbrella insurance covers both legal defense costs and settlement or judgment amounts, not just defense costs. Question 6. Martha, a resident of Kentucky, has a personal auto policy PAP with the following coverage limits. $100,000 for liability coverage per person, $300,000 per accident, and $50,000 for property damage. After an accident where Martha is found to be at fault, her liability costs amount to $250,000 in bodily injury claims for one person and $60,000 in property damage. Martha's policy has a $500 deductible for property damage coverage. How much will Martha's insurance pay for the property damage claim after applying the deductible? A. $50,000. B. $60,000. C. $50,000. $500. D. $60,000. $500. Correct answer A. $50,000. Explanation. Martha's personal auto policy PAP provides up to $50,000 for property damage. Since the total property damage claim is $60,000, the deductible of $500 applies to reduce the amount covered by the policy. The policy will pay up to its limit of $50,000 for property damage, regardless of the deductible, as the deductible affects the amount Martha has to pay out of pocket before insurance kicks in. Option B is incorrect because $60,000 is beyond the policy limit for property damage coverage. Options C and D are incorrect because they incorrectly apply the deductible to the policy limit rather than considering the policy limit itself. Question 7. In Kentucky, which of the following accurately describes the loss of use coverage under dwelling policy? DPA 2. Their loss of use coverage provides reimbursement for additional living expenses incurred while the dwelling is being repaired due to a covered peril. B. A loss of use coverage compensates the insured for the loss of rental income from a rental property that becomes uninhabitable due to a covered peril. C. Loss of use coverage provides a fixed amount for temporary housing regardless of the actual expenses incurred by the insured. D. Loss of use coverage reimburses the insured for the cost of repairing or replacing personal property damaged by a covered peril. Correct answer: A. Loss of use coverage provides reimbursement for additional living expenses incurred while the dwelling is being repaired due to a covered peril. Explanation: Loss of use coverage under a dwelling policy DPA 2 is designed to reimburse the insured for additional living expenses incurred while their dwelling is uninhabitable due to a covered peril. This coverage helps pay for temporary housing, meals, and other expenses that arise from the inability to live in the damaged dwelling. Option B is incorrect because compensation for rental income loss is covered under fair rental value, not loss of use. Option C is incorrect as loss of use coverage is based on actual incurred expenses rather than a fixed amount. Option D is incorrect because loss of use does not cover the repair or replacement of personal property but rather covers living expenses. Question 8. In Kentucky, which of the following statements is correct regarding the scheduled personal property endorsement under a homeowner's insurance policy? A. The scheduled personal property endorsement increases the coverage limit for specific high-value items and may provide broader protection for these items. B. The scheduled personal property endorsement replaces standard homeowners insurance coverage with a high deductible for personal property. C. The scheduled personal property endorsement extends liability coverage for incidents involving specific personal items like jewelry or fine art. D. The scheduled personal property endorsement covers personal property for additional perils not covered under the standard policy, such as earthquakes or floods. Correct answer: A. The scheduled personal property endorsement increases the coverage limit for specific high-value items and may provide broader protection for these items. Explanation: The scheduled personal property endorsement allows homeowners to increase coverage limits for specific high-value items, such as jewelry, fine art, or collectibles. This endorsement provides more comprehensive protection for these items, often covering risks not included in the standard policy, such as accidental loss or damage. Option B is incorrect because the endorsement increases coverage limits rather than replacing standard coverage with a high deductible. Option C is incorrect as the endorsement does not extend liability coverage but enhances coverage for high-value personal items. Option D is incorrect because coverage for specific perils like earthquakes or floods typically requires separate endorsements or policies. Question 9. David, a resident of Kentucky, has a personal auto policy pack with the following coverages: liability coverage of $250,000 per person, $500,000 per accident, and $100,000 for property damage. David's car is involved in an accident where he is found to be at fault. The total damages are $450,000 for bodily injury to 2 individuals and $120,000 for property damage. How much will David's insurance pay for the bodily injury and property damage claims considering the policy limits? A. $450,000 for bodily injury and $100,000 for property damage. B. $250,000 for each bodily injury claim and $100,000 for property damage, totaling $600,000. C. $500,000 total for bodily injury combined and $100,000 for property damage. D. $450,000 total for bodily injury and $120,000 for property damage, with David covering the excess amount. Correct answer: C. $500,000 total for bodily injury combined and $100,000 for property damage. Explanation. David's personal auto policy, PAP, provides $250,000 per person and $500,000 per accident for bodily injury. The total bodily injury claim is $450,000, which falls within the policy limit of $500,000 for the accident. The property damage claim is $120,000, but the policy limit is $100,000, so the insurance will cover up to $100,000 for property damage. Option A is incorrect as the policy covers $450,000 in bodily injury, but only $100,000 in property damage, not $120,000. Option B is incorrect because the total payment is constrained by the policy limits. Option D is incorrect because the total payment for bodily injury is limited to $500,000 and David will have to cover any excess for property damage. Question 10. In Kentucky, how does the deductible function in a personal auto policy, PAP, when filing a claim for comprehensive coverage? A. The deductible amount is subtracted from the total claim amount before the insurer pays the remaining balance for the loss. B. The deductible is applied only if the total claim amount exceeds the policy limit. C. The deductible is an additional fee paid by the insured over and above the policy limits for any loss. D. The deductible is waived if the insured's vehicle is involved in a hit-and-run accident. Correct answer A. The deductible amount is subtracted from the total claim amount before the insurer pays the remaining balance for the loss. Explanation. In a personal auto policy, PAP, the deductible for comprehensive coverage is the amount the insured must pay out of pocket before the insurance company will cover the remaining cost of the loss. For example, if the insured has a $500 deductible and a total loss of $2,000, the insurer will pay $1,500, $2,000, $500. Option B is incorrect because the deductible applies regardless of whether the total claim amount exceeds the policy limit. Option C is incorrect because the deductible is not an additional fee beyond policy limits but a portion of the claim the insured is responsible for. Option D is incorrect as the deductible generally applies regardless of the circumstances of the accident. Question 11. Which of the following accurately describes the named perils coverage provided by a dwelling policy Deep One in Kentucky? A. Named perils coverage provides protection only for the specific perils listed in the policy, such as fire, windstorm, and theft. B. Named perils coverage protects against all risks except those specifically excluded in the policy. C. Named perils coverage automatically includes additional perils that are not listed in the policy but are commonly covered by other insurance policies. D. Named perils coverage provides protection for any unforeseen perils not specifically named in the policy. Correct answer A. Named perils coverage provides protection only for the specific perils listed in the policy, such as fire, windstorm, and theft. Explanation. The named perils coverage under dwelling policy Deep One provides protection only for the specific risks explicitly listed in the policy. These perils are predefined and do not include any coverage for risks not mentioned or excluded. Option B is incorrect because named perils coverage does not cover all risks except those excluded but only those specifically listed. Option C is incorrect as additional perils are not automatically included. They would require endorsements. Option D is incorrect because named perils coverage does not include unforeseen or unlisted perils. Question 12. Alice, a homeowner in Kentucky, has a 3 homeowners insurance policy with the following coverage limits: $200,000 for dwelling coverage, $20,000 for other structures, and $15,000 for personal property. After a fire, the following damages are reported: $180,000 to the dwelling, $18,000 to the detached garage, and $12,000 in personal property losses. Additionally, Alice incurs $7,000 in loss of use expenses. How much will Alice's policy pay in total considering the coverage limits and deductibles? A. $180,000 for dwelling, $18,000 for other structures, $12,000 for personal property, and $7,000 for loss of use, totaling $217,000. B. $200,000 for dwelling, full limit, $20,000 for other structures, full limit, $12,000 for personal property, and $7,000 for loss of use, totaling $239,000. C. $180,000 for dwelling, $18,000 for other structures, $15,000 for personal property, full limit, and $7,000 for loss of use, totaling $220,000. D. $180,000 for dwelling, $18,000 for other structures, $12,000 for personal property, and $7,000 for loss of use, totaling $217,000. Correct answer B. $200,000 for dwelling, full limit, $20,000 for other structures, full limit, $12,000 for personal property, and $7,000 for loss of use, totaling $239,000. Explanation: the Hoth-Re policy covers dwelling coverage up to $200,000, policy limit; other structures coverage up to $20,000, policy limit; personal property coverage up to $15,000, policy limit with $12,000 in losses; loss of use coverage is needed with $7,000 in expenses. Thus, the total payment includes the maximum policy limits for dwelling and other structures, the actual loss for personal property, and the loss of use expenses. Option A is incorrect as it does not account for the full limits on dwelling and other structures. Option C is incorrect due to the personal property limit not being fully utilized. Option D is incorrect because it does not account for the full limits on dwelling and other structures. Question 13. In Kentucky, which of the following accurately describes the coverage for additional living expenses under a homeowner's insurance policy? A. ALE provides reimbursement for expenses incurred by the insured due to the need for temporary housing and additional costs while their home is being repaired or rebuilt after covered loss. BALE compensates the insured for the cost of repairs and improvements to the home, regardless of whether it is uninhabitable or not. C. ALE covers expenses related to damages to personal property while the insured is residing in temporary housing. D. ALE provides a fixed allowance for temporary housing and does not require documentation of actual expenses incurred. Correct answer: ALE provides reimbursement for expenses incurred by the insured due to the need for temporary housing and additional costs while their home is being repaired or rebuilt after covered loss. Explanation: coverage for additional living expenses under a homeowner's insurance policy is designed to reimburse the insured for increased living costs incurred while their home is uninhabitable due to a covered peril. This includes temporary housing, meals, and other necessary expenses beyond the normal living costs. Option B is incorrect because ALE does not cover repairs or improvements to the home but only additional living costs. Option C is incorrect as ALE does not cover damages to personal property but rather the costs associated with temporary living arrangements. Option D is incorrect because ALE requires documentation of actual incurred expenses, not a fixed allowance. Question 14. In Kentucky, which statement is true regarding the fair rental value coverage under dwelling policy DPA 2? A. Fair rental value provides compensation for lost rental income when a rental property is rendered uninhabitable due to a covered peril up to the policy limits. B. Fair rental value coverage only applies to residential properties and does not extend to commercial rental properties. C. Fair rental value is included automatically in all dwelling policies and does not require a specific endorsement or additional premium. D. Fair rental value coverage compensates the insured for the cost of temporary relocation while their rental property is being repaired. Correct answer: A. Fair rental value provides compensation for lost rental income when a rental property is rendered uninhabitable due to a covered peril up to the policy limits. Explanation: fair rental value coverage under dwelling policy DPA 2 compensates the insured for the loss of rental income if the rental property becomes uninhabitable due to a covered peril. This coverage helps offset the financial loss associated with the inability to rent out the property. Option B is incorrect as fair rental value can apply to both residential and commercial rental properties if specified in the policy. Option C is incorrect because fair rental value is not automatically included in all policies and may require a specific endorsement. Option D is incorrect because fair rental value covers lost rental income, not relocation costs. Question 15. Emily, a Kentucky resident, has a personal umbrella policy with a $1 million limit and a self-insured retention of $1,000. Emily is involved in a car accident where she is found liable for $1,500,000 in damages. Her underlying auto insurance covers $500,000 of the damages. How much will Emily's umbrella policy pay towards the claim? A. $500,000. B. $1 million. C. $1 million. $1,000. D. $1,500,000. $500,000. Correct answer. B. $1 million. Explanation. In this scenario, Emily's personal umbrella policy will cover the amount exceeding her underlying auto insurance and her self-insured retention, sir. Since the auto insurance covers $500,000 of the $1,500,000 damages, the remaining amount is $1 million. The umbrella policy will cover up to its limit of $1 million. Option A is incorrect because the umbrella policy covers more than $500,000. Option C is incorrect as the SIR applies to the coverage amount and not deducted from the umbrella limit. Option D is incorrect because the umbrella policy limit is $1 million and the SIR is not subtracted from the limit but from the amount covered after the primary insurance. Question 16. Which of the following accurately describes the difference between open perils and named perils coverage under a homeowner's insurance policy in Kentucky? A. Open perils coverage includes protection against all risks except those specifically excluded, whereas named perils coverage only protects against risks specifically listed in the policy. B. Open perils coverage only applies to the dwelling, while named perils coverage applies only to personal property. C. Open perils coverage offers higher limits for personal property, while named perils coverage offers lower limits. D. Open perils coverage is typically less expensive than named perils coverage due to its broader scope. Correct answer. A. Open perils coverage includes protection against all risks except those specifically excluded, whereas named perils coverage only protects against risks specifically listed in the policy. Explanation. Open perils, also known as all risks, coverage provides protection against all risks unless specifically excluded in the policy, offering broader protection. Named perils coverage, on the other hand, covers only those risks that are explicitly listed in the policy. This makes open perils generally more comprehensive compared to named perils coverage. Option B is incorrect because open perils coverage applies to both the dwelling and personal property, and named perils coverage can apply to both as well. Option C is incorrect as limits are not inherently higher or lower based on the type of perils coverage. Option D is incorrect because open perils coverage is usually more expensive due to its broader protection. Question 17. In Kentucky, which of the following statements about the uninsured motorist coverage under a personal auto policy (PAP) is correct? A. Uninsured motorist coverage pays for damages caused by drivers who have insufficient insurance to cover the costs of the accident. B. Uninsured motorist coverage only applies if the at-fault driver has no insurance and not if they have inadequate insurance. C. Uninsured motorist coverage provides protection only for property damage but not for bodily injury. D. Uninsured motorist coverage is automatically included in all personal auto policies and does not require a separate election or endorsement. Correct answer. A. Uninsured motorist coverage pays for damages caused by drivers who have insufficient insurance to cover the costs of the accident. Explanation. Uninsured motorist coverage in a personal auto policy (PAP) provides protection for damages caused by drivers who either have no insurance or insufficient insurance to cover the full extent of the damages. This coverage helps compensate the insured for medical expenses, lost wages, and other losses resulting from an accident with an underinsured or uninsured driver. Option B is incorrect because uninsured motorist coverage applies both when the at-fault driver has no insurance and when they have inadequate insurance. Option C is incorrect because uninsured motorist coverage generally covers both bodily injury and property damage, depending on the specific policy. Option D is incorrect because uninsured motorist coverage is not automatically included in all policies. It often requires a specific election or endorsement. Question 18. Robert, who resides in Kentucky, has a dwelling policy DP3 with coverage with dwelling at $250,000, coverage B, other structures at $25,000, and coverage C, personal property at $100,000. Following a storm, Robert incurs $275,000 in damages to his dwelling, $30,000 to a detached garage, and $85,000 in personal property losses. What will Robert's policy pay considering the coverage limits and the fact that the policy includes a $1,000 deductible for property damage, a $275,000 for dwelling, $25,000 for other structures, and $85,000 for personal property, totaling $385,000 minus $1,000 deductible? B. $250,000 for dwelling, $25,000 for other structures, and $85,000 for personal property, totaling $360,000 minus $1,000 deductible. C. $275,000 for dwelling limit, $30,000 for other structures limit, and $85,000 for personal property, totaling $390,000 minus $1,000 deductible. D. $250,000 for dwelling limit, $25,000 for other structures limit, and $85,000 for personal property, totaling $360,000 minus $1,000 deductible. Correct answer. B. Add an endorsement for specific perils such as earthquake, flood, or sewer backup, depending on his needs. Explanation. To ensure comprehensive coverage for specific risks not covered by a standard homeowner's insurance policy, Tom should consider adding endorsements or riders for perils such as earthquake, flood, or sewer backup. Standard policies often have exclusions for these risks, so endorsements provide additional protection tailored to his specific needs. Option A is incorrect because increasing the policy limit alone does not extend coverage to excluded perils. Option C is not accurate because dwelling policies typically offer less comprehensive coverage for personal property and liability compared to homeowners' insurance policies. Option D is incorrect because standard policies may not cover all potential risks, necessitating additional endorsements. Question 19. In Kentucky, which of the following best describes the personal liability coverage under a homeowner's insurance policy? A. Personal liability coverage provides protection for the insured against claims for bodily injury or property damage that occurs on their property but does not cover incidents that happen off the property. B. Personal liability coverage protects the insured if they are legally liable for damages due to negligence that results in bodily injury or property damage to others, regardless of where the incident occurs. C. Personal liability coverage offers protection for intentional acts of harm committed by the insured as long as they are within their property boundaries. D. Personal liability coverage is designed to cover the cost of medical expenses for the insured's family members if they are injured on the insured's property. Correct answer. B. Personal liability coverage protects the insured if they are legally liable for damages due to negligence that results in bodily injury or property damage to others, regardless of where the incident occurs. Explanation. Personal liability coverage under a homeowner's insurance policy provides protection for the insured in the event they are legally liable for bodily injury or property damage caused by their negligence. This coverage applies regardless of whether the incident occurs on or off the insured's property. Option A is incorrect because personal liability coverage extends beyond the insured's property to cover incidents that occur elsewhere. Option C is incorrect as it does not cover intentional acts of harm. Option D is incorrect because personal liability coverage does not cover medical expenses for the insured's family members. This is typically covered under medical payments to others. Question 20. In Kentucky, which of the following statements about earthquake insurance is accurate? A. Earthquake insurance is typically included in standard homeowners insurance policies and does not require a separate endorsement or policy. B. Earthquake insurance covers only structural damage to the dwelling and excludes damage to personal property. C. Earthquake insurance policies often have high deductibles and provide coverage for structural damage, personal property, and additional living expenses. D. Earthquake insurance is automatically included in all dwelling policies and requires no additional premium. Correct answer. C. Earthquake insurance policies often have high deductibles and provide coverage for structural damage, personal property, and additional living expenses. Explanation. Earthquake insurance is not included in standard homeowners insurance policies. It usually requires a separate endorsement or a standalone policy. Earthquake insurance often features high deductibles due to the potential for significant damage. It typically covers structural damage to the dwelling, personal property, and additional living expenses incurred while the home is being repaired. Option A is incorrect because earthquake insurance is not automatically included and requires a separate endorsement or policy. Option B is incorrect as earthquake insurance covers both structural damage and personal property. Option D is incorrect because earthquake insurance is not automatically included in dwelling policies and requires additional premium. Question 21. Jack, a Kentucky homeowner, as a homeowner's insurance policy Hothery with the following coverage limits. $300,000 for dwelling coverage, $30,000 for other structures, and $150,000 for personal property. After a severe windstorm, Jack incurs $320,000 in damages to his dwelling, $35,000 to a detached shed, and $140,000 in personal property losses. Additionally, Jack has $10,000 in loss of use expenses. How much will Jack's insurance pay considering the coverage limits and the $1,000 deductible for property damage? A. $300,000 for dwelling, $30,000 for other structures, $140,000 for personal property, and $10,000 for loss of use, totaling $480,000 minus $1,000 deductible. B. $300,000 for dwelling, limit $30,000 for other structures, limit $140,000 for personal property, limit, and $10,000 for loss of use, totaling $480,000 minus $1,000 deductible. C. $300,000 for dwelling, limit $30,000 for other structures, limit $140,000 for personal property, and $10,000 for loss of use, totaling $470,000 minus $1,000 deductible. D. $300,000 for dwelling, limit $30,000 for other structures, limit $140,000 for personal property, and $10,000 for loss of use, totaling $480,000 with no deductible. Correct answer A. $300,000 for dwelling, $30,000 for other structures, $140,000 for personal property, and $10,000 for loss of use, totaling $480,000 minus $1,000 deductible. Explanation. Jack's homeowners insurance policy limits are dwelling coverage, $300,000, limit actual damage is $320,000. Other structures, $30,000, limit actual damage is $35,000. Personal property, $150,000, limit actual loss is $140,000. Loss of use, covered up to actual expenses, $10,000. Total payout calculation, dwelling, $300,000, limit. Other structures, $30,000, limit. Personal property, $140,000 actual loss, within limit. Loss of use, $10,000. Total $300,000 plus $30,000 plus $140,000 plus $10,000 equals $480,000. After applying the $1,000 deductible, the insurer will pay $479,000. Option B is incorrect because the deductible must be applied. Option C is incorrect as it miscalculates the deductible application. Option D is incorrect because the deductible applies to the total payout. Question 22. Which of the following statements accurately describes the coverage provided by a personal articles floater in Kentucky? A. A personal articles floater provides coverage for items such as jewelry, fine art, and collectibles against specific named perils, including theft and fire, but does not cover accidental damage. B. A personal articles floater offers broad or risk coverage for items like jewelry and electronics, regardless of whether the loss is due to a named peril or an accidental event. C. A personal articles floater provides coverage for items that are used for business purposes, such as tools and equipment, under the standard homeowners policy. D. A personal articles floater is typically included in standard homeowners insurance policies and does not require a separate endorsement or additional premium. Correct answer. B. A personal articles floater offers broad or risk coverage for items like jewelry and electronics, regardless of whether the loss is due to a named peril or an accidental event. Explanation. A personal articles floater provides broad or risk coverage for specified high-value items, such as jewelry, electronics, and fine art. It covers risks beyond named perils and includes accidental damage, offering protection for almost any cause of loss except those specifically excluded in the policy. Option A is incorrect because the floater provides broad or risk coverage rather than just against specific named perils. Option C is incorrect as business-related items are generally not covered by a personal articles floater and would require a separate business policy. Option D is incorrect because a personal articles floater typically requires a separate endorsement or policy and is not included in standard homeowners policies. Question 23. In Kentucky, which of the following is true regarding the exclusion of coverage for wear and tear under a dwelling policy DP3? A. Coverage for wear and tear is typically included under E3 policy as it provides comprehensive protection for all types of property damage. B. The exclusion of wear and tear means that the policy will not cover damage to the dwelling or personal property resulting from aging, deterioration, or lack of maintenance. C. The exclusion of wear and tear applies only to damages related to the dwelling structure but not to personal property. D. Wear and tear coverage is excluded under a E3 policy, but this exclusion does not affect any other coverages related to sudden and accidental damage. Correct answer. B. The exclusion of wear and tear means that the policy will not cover damage to the dwelling or personal property resulting from aging, deterioration, or lack of maintenance. Explanation. Under dwelling policy DP3, wear and tear is specifically excluded from coverage. This means that the policy will not cover damages arising from aging, deterioration, or lack of proper maintenance, as these are considered to be issues related to the upkeep of the property rather than sudden and accidental damage. Option A is incorrect because wear and tear is not covered under a D3 policy. Option C is incorrect because the exclusion applies to both dwelling and personal property. Option D is incorrect because the exclusion of wear and tear affects the coverage for both sudden and accidental damage and maintenance issues. Question 24. Sophia, a Kentucky resident, has a personal auto policy PAP with the following coverage: liability coverage, Part A, with $300,000 per occurrence, medical payments coverage, Part B, with $5,000 per person, and uninsured motorist coverage, Part C, with $100,000 per occurrence. Sophia is involved in an accident where she is at fault, and the damages amount to $350,000 for bodily injury and $40,000 for property damage. Sophia's auto insurance is able to cover $250,000 of the bodily injury costs and $40,000 of the property damage. What amount will Sophia's uninsured motorist coverage pay if the at-fault driver is uninsured and the total loss is $350,000 for bodily injury and $50,000 for property damage? A. $100,000 for bodily injury and $50,000 for property damage. B. $100,000 for bodily injury and $40,000 for property damage. C. $100,000 for bodily injury and $0 for property damage. D. $50,000 for bodily injury and $40,000 for property damage. Correct answer A. $100,000 for bodily injury and $50,000 for property damage. Explanation. Sophia's uninsured motorist coverage, Part C, provides up to $100,000 per occurrence for bodily injury and coverage for property damage. Since the at-fault driver is uninsured, Sophia's policy will cover the remaining amount of $100,000 for bodily injury since the policy limit for bodily injury is exhausted, and $50,000 for property damage, covering the shortfall after the primary insurance. Option B is incorrect because it does not account for the full property damage coverage provided by the uninsured motorist coverage. Option C is incorrect because the policy does provide coverage for property damage. Option D is incorrect because it does not fully utilize the coverage limit for bodily injury and does not account for the total coverage for property damage. Question 25. Under personal auto policy PAP in Kentucky, which of the following statements about medical payments coverage? Part B is correct. A. Medical payments coverage pays for medical expenses incurred by passengers in the insured vehicle, but not for the insured driver or their family members. B. Medical payments coverage provides reimbursement for medical expenses incurred by the insured and passengers regardless of who is at fault for the accident. C. Medical payments coverage is only applicable if the insured driver has primary health insurance coverage. D. Medical payments coverage covers expenses related to long-term rehabilitation and lost wages for the insured and their family members. Correct answer. B. Medical payments coverage provides reimbursement for medical expenses incurred by the insured and passengers regardless of who is at fault for the accident. Explanation. Medical payments coverage, Part B, under personal auto policy, PAP offers reimbursement for medical expenses resulting from an auto accident for the insured, family members, and passengers in the insured vehicle regardless of fault. This coverage is designed to pay for necessary medical expenses without regard to other insurance. Option A is incorrect because medical payments coverage applies to the insured driver and their family members as well as passengers. Option C is incorrect because medical payments coverage is available regardless of whether the insured has primary health insurance. Option D is incorrect because medical payments coverage does not cover long-term rehabilitation or lost wages. It focuses solely on medical expenses. Question 26. In Kentucky, which of the following best describes that self-insured retention? Sir, in a personal umbrella policy, A. The self-insured retention is an amount that the insured must pay out of pocket before the personal umbrella policy starts providing coverage for a claim. B. The self-insured retention is a specific limit within the personal umbrella policy that applies to certain types of claims but not to others. C. The self-insured retention is a deductible amount that applies to each individual claim covered by the personal umbrella policy. D. The self-insured retention is the maximum amount the personal umbrella policy will pay per occurrence for covered claims. Correct answer A. The self-insured retention is an amount that the insured must pay out of pocket before the personal umbrella policy starts providing coverage for a claim. Explanation: the self-insured retention in a personal umbrella policy refers to the amount that the insured is responsible for paying out of pocket before the umbrella policy begins to cover the remaining costs. This is a form of primary insurance retention that applies to the claims for which the umbrella policy provides excess coverage. Option B is incorrect because the SIR is not limited to certain types of claims. It applies generally to claims covered by the umbrella policy. Option C is incorrect because the SIR is a total amount to be paid out of pocket before coverage kicks in, rather than a per claim deductible. Option D is incorrect because the SIR is not a limit on the policy's payout, but rather a threshold the insured must meet before coverage applies. Question 27. Emily, a homeowner in Kentucky, has a homeowner's insurance policy HO5 with the following coverage: $400,000 for dwelling coverage, $50,000 for other structures, and $200,000 for personal property. After a fire, Emily sustains $420,000 in damages to her dwelling, $60,000 to a detached garage, and $180,000 in personal property losses. Additionally, Emily incurs $12,000 in loss of use expenses. What will be the total payout from Emily's homeowner's insurance policy considering the coverage limits and the $1,000 deductible? A. $400,000 for the dwelling, $50,000 for the detached garage, $180,000 for personal property, and $12,000 for loss of use, totaling $642,000 minus $1,000 deductible. B. $400,000 for the dwelling limit, $50,000 for the detached garage limit, $180,000 for personal property limit, and $12,000 for loss of use, totaling $642,000 minus $1,000 deductible. C. $400,000 for the dwelling limit, $50,000 for the detached garage limit, $180,000 for personal property, and $12,000 for loss of use, totaling $641,000 minus $1,000 deductible. D. $400,000 for the dwelling limit, $50,000 for the detached garage limit, $180,000 for personal property limit, and $12,000 for loss of use, totaling $642,000 with no deductible. Correct answer: B. $400,000 for the dwelling limit, $50,000 for the detached garage limit, $180,000 for personal property limit, and $12,000 for loss of use, totaling $642,000 minus $1,000 deductible. Explanation: Emily's homeowner's insurance policy has the following coverage limits: dwelling coverage, $400,000 limit, other structures, $50,000 limit, personal property, $200,000 limit, but the actual loss is $180,000. Loss of use, actual expenses incurred, which are $12,000. The total covered amount is dwelling, $400,000 limit, other structures, $50,000 limit, personal property, $180,000 within the limit, loss of use, $12,000. Total loss $400,000 plus $50,000 plus $180,000 plus $12,000 equals $642,000. After applying the $1,000 deductible, the payout is $641,000. Option A is incorrect because it does not account for the deductible. Option C is incorrect because the deductible application is incorrect. Option D is incorrect as the deductible must be applied. Question 28. In Kentucky, which of the following is true regarding endorsements to a homeowner's insurance policy? A. Endorsements are used to exclude certain types of coverage from the policy, and they generally lower the premium cost. B. Endorsements provide additional coverage or modify the terms of the standard homeowner's insurance policy, often addressing specific needs or risks. C. Endorsements are required by law for all homeowners' insurance policies to ensure compliance with state regulations. D. Endorsements increase the base policy limits but do not change the coverage conditions or exclusions. Correct answer: B. Endorsements provide additional coverage or modify the terms of the standard homeowner's insurance policy, often addressing specific needs or risks. Explanation. Endorsements are additions to a homeowner's insurance policy that either provide extra coverage or modify existing coverage to address specific needs or risks. They allow policyholders to tailor their insurance to better fit unique circumstances, such as adding coverage for high-value items or expanding protection against certain types of losses. Option A is incorrect because endorsements typically add coverage or modify existing terms rather than exclude coverage. Option C is incorrect because endorsements are not mandated by law but are used at the policyholder's discretion to adjust coverage. Option D is incorrect because endorsements can change both coverage limits and terms, not just increase the limits. Question 29. Which of the following best describes the fair rental value coverage under dwelling policy DP3 in Kentucky? A. Fair rental value coverage pays for the actual loss of rental income from a rental property if it becomes uninhabitable due to a covered peril. B. Fair rental value coverage is a standard feature of all dwelling policies and automatically provides coverage for rental income loss. C. Fair rental value coverage compensates for loss of rental income due to tenant non-payment, regardless of the reason for non-payment. D. Fair rental value coverage includes expenses for repairing damage to the rental property caused by tenant neglect. Correct answer A. Fair rental value coverage pays for the actual loss of rental income from a rental property if it becomes uninhabitable due to a covered peril. Explanation. Fair rental value coverage under dwelling policy DP3 compensates the property owner for the loss of rental income when the property becomes uninhabitable due to a covered peril, such as a fire or storm. It is designed to cover the rental income that would have been earned during the period of repair. Option B is incorrect because fair rental value coverage is not automatically included in all dwelling policies and may require an endorsement. Option C is incorrect as it does not cover loss of rental income due to tenant non-payment. Option D is incorrect because it does not cover damage due to tenant neglect. It is for income loss resulting from a covered peril. Question 30. Robert, a Kentucky resident, has a personal auto policy PAP with $250,000 liability coverage per occurrence and $50,000 uninsured motorist coverage Part C for bodily injury. Robert is involved in an accident where he is not at fault and the damages are $300,000 for bodily injury and $20,000 for property damage. The at-fault driver is uninsured. What is the total amount that Robert's uninsured motorist coverage will pay for the bodily injury portion, and how does it interact with his liability coverage? A. $50,000 for bodily injury. Robert's liability coverage does not interact with uninsured motorist coverage. B. $250,000 for bodily injury. Robert's liability coverage will not pay anything as the uninsured motorist coverage will cover the difference. C. $50,000 for bodily injury. Robert's liability coverage will cover the remaining $250,000. D. $250,000 for bodily injury. Uninsured motorist coverage will cover the entire $300,000 with no additional payment from the liability coverage. Correct answer A. $50,000 for bodily injury. Robert's liability coverage does not interact with uninsured motorist coverage. Explanation. Uninsured motorist coverage Part C covers up to $50,000 for bodily injury caused by an uninsured driver. Since the at-fault driver is uninsured, Robert's uninsured motorist coverage will pay up to its limit of $50,000. Liability coverage is used to cover damages for which Robert is at fault, but since he is not at fault in this situation, the liability coverage does not apply. Option B is incorrect because uninsured motorist coverage does not replace liability coverage. It provides additional coverage where the other driver is uninsured. Option C is incorrect as the liability coverage does not interact in this scenario where Robert is not at fault. Option D is incorrect because uninsured motorist coverage will only pay up to its limit, not the entire $300,000. Question 31. In Kentucky, under the National Flood Insurance Program, NFIP, which of the following accurately describes the increased cost of compliance like coverage? A. ICC coverage provides financial assistance to repair flood-damaged property to its pre-flood condition without requiring any changes to meet current building codes. B. ICC coverage offers funds to elevate, flood-proof, or otherwise bring a building up to current floodplain management standards after it has been damaged by a flood. C. ICC coverage is automatically included in all flood insurance policies and does not require an additional premium. The ICC coverage is designed to cover losses from earthquakes and is not related to flood damage or building code compliance. Correct answer. BICC coverage offers funds to elevate flood-proof or otherwise bring a building up to current floodplain management standards after it has been damaged by a flood. Explanation: increased cost of compliance coverage under the NFIP provides financial assistance to policyholders to bring their flood-damaged property up to current building codes and floodplain management standards. This coverage helps cover the costs of elevating, flood-proofing, or otherwise modifying the property to reduce future flood risk. Option A is incorrect because ICC coverage is specifically for bringing a building up to current standards, not just repairing it to its pre-flood condition. Option C is incorrect as ICC coverage is not automatically included. It must be requested and may require an additional premium. Option D is incorrect because ICC coverage is related to flood damage, not earthquake coverage. Question 32. Which of the following best explains the principle of indemnity in Kentucky insurance policies? A. The principle of indemnity ensures that an insured person can receive an amount exceeding their actual loss to account for future risks. B. The principle of indemnity allows for reimbursement only up to the actual amount of loss without providing additional compensation beyond that amount. C. The principle of indemnity provides coverage for both actual cash value and replacement cost of property depending on the policy. D. The principle of indemnity focuses on paying the insured a lump sum amount regardless of the actual loss incurred. Correct answer: B. The principle of indemnity allows for reimbursement only up to the actual amount of loss without providing additional compensation beyond that amount. Explanation: the principle of indemnity dictates that an insurance policy should only compensate the insured for the actual amount of loss or damage incurred, not to exceed the amount of the loss. This principle ensures that the insured is restored to their pre-loss financial position but does not gain financially from the insurance claim. Option A is incorrect because the principle of indemnity limits reimbursement to the actual amount of the loss, not beyond it. Option C is incorrect because the principle itself does not determine coverage type's actual cash value versus replacement cost, but rather the concept of reimbursement up to the loss amount. Option D is incorrect because the principle is about actual loss and does not involve lump sum payments regardless of the loss. Question 33. Jessica, a Kentucky resident, holds a homeowner's insurance policy Hothery with the following coverage limits: dwelling coverage of $350,000, other structures coverage of $40,000, and personal property coverage of $150,000. After storm, Jessica's home sustains $360,000 in damage, her detached garage incurs $45,000 in damage, and her personal property losses amount to $120,000. Additionally, Jessica incurs $8,000 in loss of use expenses. How much will Jessica's homeowner's insurance policy pay out in total after applying the $1,000 deductible? A. $360,000 for the dwelling, $40,000 for the detached garage, $120,000 for personal property, and $8,000 for loss of use, totaling $548,000 minus $1,000 deductible. B. $350,000 for the dwelling, limit $40,000 for the detached garage, limit $120,000 for personal property, and $8,000 for loss of use, totaling $518,000 minus $1,000 deductible. C. $350,000 for the dwelling, limit $40,000 for the detached garage, limit $120,000 for personal property, and $8,000 for loss of use, totaling $518,000 with no deductible. D. $350,000 for the dwelling, limit $40,000 for the detached garage, limit $150,000 for personal property, limit, and $8,000 for loss of use, totaling $548,000 minus $1,000 deductible. Correct answer: B. $350,000 for the dwelling, limit $40,000 for the detached garage, limit $120,000 for personal property, and $8,000 for loss of use, totaling $518,000 minus $1,000 deductible. Explanation: Jessica's homeowner's insurance policy has specific limits for coverage. Dwelling, $350,000 limit, so it covers up to this amount. Other structures, $40,000 limit, so it covers up to this amount. Personal property, $120,000 actual loss, which is within the limit. Loss of use, $8,000 actual expense incurred. The total coverage payout is dwelling, $350,000 limit. Other structures, $40,000 limit. Personal property, $120,000. Loss of use, $8,000. Total equals $350,000 plus $40,000 plus $120,000 plus $8,000 equals $518,000. After applying the $1,000 deductible, the payout is $517,000. Option A is incorrect as the dwelling coverage limit and other structure limits apply. Option C is incorrect due to the application of the deductible. Option D is incorrect because the personal property loss is $120,000, which is within the policy limit but does not exceed it. Question 34. In Kentucky, what is the primary difference between named perils and open perils coverage in a homeowner's insurance policy? A. Named perils coverage protects against all risks except those specifically excluded, while open perils coverage only covers risks explicitly listed in the policy. B. Named perils coverage lists specific perils covered by the policy, while open perils coverage provides protection against all risks except those specifically excluded. C. Named perils coverage is typically more expensive than open perils coverage due to its broader scope. D. Open perils coverage is limited to specific perils named in the policy, while named perils coverage includes risks not listed. Correct answer. B. Named perils coverage lists specific perils covered by the policy, while open perils coverage provides protection against all risks except those specifically excluded. Explanation: named perils coverage only protects against risks specifically listed in the policy, such as fire, theft, or vandalism. In contrast, open perils coverage provides broader protection, covering all risks except those explicitly excluded in the policy. This makes open perils coverage more comprehensive but often more expensive. Option A is incorrect because it reverses the definitions of named and open perils. Option C is incorrect as named perils coverage is generally less expensive than open perils due to its narrower scope. Option D is incorrect because open perils coverage does not limit protection to named perils. It covers all risks except exclusions. Question 35. Which of the following best describes the liability coverage ECA personal auto policy PAP in Kentucky? A. Liability coverage provides protection for damages to the insured's own vehicle caused by a collision, regardless of fault. B. Liability coverage pays for bodily injury and property damage caused by the insured to others while driving up to the policy limits. C. Liability coverage includes medical payments for injuries sustained by the insured and passengers in the insured vehicle. D. Liability coverage covers losses resulting from uninsured or underinsured drivers up to the policy limits. Correct answer. B. Liability coverage pays for bodily injury and property damage caused by the insured to others while driving up to the policy limits. Explanation: liability coverage under personal auto policy PAP is designed to protect the insured from financial loss due to bodily injury or property damage caused to others in an accident where the insured is at fault. This coverage includes both bodily injury liability and property damage liability, with payouts limited to the policy limits. Option A is incorrect because coverage for damages to the insured's own vehicle would fall under collision coverage, not liability coverage. Option C is incorrect as medical payments coverage is a separate part of the policy. Option D is incorrect because uninsured and underinsured motorist coverage addresses losses caused by drivers without sufficient insurance, not liability coverage. Question 36. Tom, a homeowner in Kentucky, has a dwelling policy DPA 2 with coverage dwelling of $200,000, coverage B other structures of $25,000, and coverage C personal property of $50,000. After severe storm, Tom's dwelling incurs $210,000 in damages, his detached shed suffers $30,000 in damage, and his personal property is valued at $40,000. Additionally, Tom incurs $5,000 in loss of use expenses. How much will Tom's dwelling policy DPA 2 pay in total considering the $1,000 deductible? They $200,000 for the dwelling, $25,000 for the shed, $40,000 for personal property, and $5,000 for loss of use, totaling $270,000 minus $1,000 deductible. B. $200,000 for the dwelling, limit $25,000 for the shed, limit $40,000 for personal property within limit, and $5,000 for loss of use, totaling $269,000 minus $1,000 deductible. C. $200,000 for the dwelling, limit $25,000 for the shed, limit $50,000 for personal property, limit, and $5,000 for loss of use, totaling $270,000 minus $1,000 deductible. D. $200,000 for the dwelling limit, $25,000 for the shed limit, $50,000 for personal property limit, and $5,000 for loss of use, totaling $270,000 with no deductible. Correct answer: B. $200,000 for the dwelling limit, $25,000 for the shed limit, $40,000 for personal property within limit, and $5,000 for loss of use, totaling $269,000 minus $1,000 deductible. Explanation: Tom's dwelling policy DPA 2 has specific coverage limits. Dwelling coverage, $200,000 limit, so it covers up to this amount. Other structures coverage, $25,000 limit, so it covers up to this amount. Personal property coverage, $50,000 limit, but Tom's personal property loss is $40,000, which is within the limit. Loss of use coverage, $5,000 actual expense incurred. The total payout is dwelling, $200,000 limit. Other structures, $25,000 limit. Personal property, $40,000 actual loss within the limit. Loss of use, $5,000. Total equal $200,000 plus $25,000 plus $40,000 plus $5,000 equals $270,000. After applying the $1,000 deductible, the payout is $269,000. Option A is incorrect due to incorrect calculation of deductible application. Option C is incorrect because the personal property loss was $40,000, not exceeding the $50,000 limit. Option D is incorrect as the deductible must be applied. Question 37. Under a personal umbrella policy in Kentucky, which of the following is a key feature of the self-insured retention? Sir, A. The self-insured retention is the amount the insurer will deduct from the total claim payment before paying out any benefits. B. The self-insured retention is the amount the insured must pay out of pocket before the umbrella policy will start covering claims. C. The self-insured retention is a fixed amount added to the primary insurance limits to increase overall coverage. D. The self-insured retention is a premium reduction offered by the insurer for high-risk individuals. Correct answer: B. The self-insured retention is the amount the insured must pay out of pocket before the umbrella policy will start covering claims. Explanation: Self-insured retention, sir, is an amount the insured must pay before the umbrella policy provides coverage for a claim. It is similar to a deductible but is applied to the amount of loss before the umbrella policy begins to cover additional amounts. It ensures that the insured has a financial stake in the claim, encouraging responsible risk management. Option A is incorrect because the SIR is not a deduction from the insurer's payment but a threshold the insured must meet. Option C is incorrect as the SIR is not added to the primary limits but is an amount the insured must pay first. Option D is incorrect because the SIR is not related to premium reductions but to the claim payment process. Question 38. Which of the following statements about the medical payments coverage, Part B, in a personal auto policy PAP in Kentucky is accurate? A. Medical payments coverage provides compensation for medical expenses regardless of who is at fault in an accident. B. Medical payments coverage only covers expenses for the insured's injuries, but not those of passengers in the vehicle. C. Medical payments coverage is subject to a deductible that must be met before benefits are paid. D. Medical payments coverage includes coverage for damages to the insured's vehicle but does not cover medical expenses. Correct answer: A. Medical payments coverage provides compensation for medical expenses regardless of who is at fault in an accident. Explanation: Medical payments coverage, Part B under personal auto policy PAP, covers reasonable medical expenses incurred by the insured and passengers in the vehicle due to an accident, regardless of who is at fault. It is designed to help cover medical costs that arise from the accident, regardless of liability. Option B is incorrect because medical payments coverage does include expenses for passengers in the vehicle, not just the insured. Option C is incorrect as medical payments coverage typically does not have a deductible. Option D is incorrect because medical payments coverage is for medical expenses, not for damages to the vehicle. Question 39. Emily, a homeowner in Kentucky, has a homeowner's insurance policy HO3 with the following coverage limits. dwelling coverage of $300,000, other structures coverage of $50,000, personal property coverage of $100,000, and loss of use coverage of $15,000. After a fire, Emily's home sustains $320,000 in damage, a detached garage incurs $55,000 in damage, and her personal property is valued at $90,000. Emily also incurs $10,000 in loss of use expenses. How much will Emily's homeowner's insurance policy pay out in total, considering the $1,000 deductible and applying the coverage limits? A. $300,000 for the dwelling limit, $50,000 for the detached garage limit, $90,000 for personal property, and $10,000 for loss of use, totaling $450,000 minus $1,000 deductible. B. $300,000 for the dwelling limit, $50,000 for the detached garage limit, $100,000 for personal property limit, and $10,000 for loss of use, totaling $460,000 minus $1,000 deductible. C. $300,000 for the dwelling limit, $50,000 for the detached garage limit, $90,000 for personal property, and $15,000 for loss of use, totaling $455,000 minus $1,000 deductible. D. $300,000 for the dwelling limit, $50,000 for the detached garage limit, $100,000 for personal property limit, and $15,000 for loss of use, totaling $465,000 with no deductible. Correct answer A. $300,000 for the dwelling limit, $50,000 for the detached garage limit, $90,000 for personal property, and $10,000 for loss of use, totaling $450,000 minus $1,000 deductible. Explanation. Emily's homeowner's insurance policy has the following limits and coverages: dwelling coverage, $300,000 limit, so it covers up to this amount. Other structures coverage, $50,000 limit, so it covers up to this amount. Personal property coverage, $100,000 limit, but her loss is $90,000, which is within the limit. Loss of use coverage, $15,000 actual expense incurred. The total payout is dwelling, $300,000 limit, other structures, $50,000 limit, personal property, $90,000 actual loss within the limit, loss of use, $10,000 actual expense incurred, total equals $300,000 plus $50,000 plus $90,000 plus $10,000 equals $450,000. After applying the $1,000 deductible, the payout is $449,000. Option B is incorrect as it includes the full personal property limit and a higher loss of use amount than what was incurred. Option C is incorrect due to an overestimated loss of use amount. Option D is incorrect as the deductible must be applied and the total coverage amount needs to match the coverage limits. Question 40. In Kentucky, which of the following statements best describes the replacement cost coverage ECA homeowners insurance policy? A. Replacement cost coverage reimburses the insured for the actual cash value of the damaged property, factoring in depreciation. B. Replacement cost coverage pays the cost to replace damaged property with new property of like kind and quality without subtracting depreciation. C. Replacement cost coverage applies only to personal property and does not affect the coverage for the dwelling or other structures. D. Replacement cost coverage is a form of liability coverage that protects against financial loss from lawsuits. Correct answer. B. Replacement cost coverage pays the cost to replace damaged property with new property of like kind and quality without subtracting depreciation. Explanation. Replacement cost coverage provides reimbursement for the cost to replace damaged or destroyed property with new items of similar type and quality without deducting for depreciation. This type of coverage ensures that the insured can replace their property at current prices without having to account for the depreciation that would be considered under actual cash value coverage. Option A is incorrect because replacement cost coverage does not account for depreciation. It covers the cost to replace the item with a new one. Option C is incorrect because replacement cost coverage can apply to both personal property and dwelling coverage depending on the policy terms. Option D is incorrect as replacement cost coverage is not related to liability but to property replacement. Question 41. In Kentucky, what is the primary purpose of the exclusion section in a homeowner's insurance policy? A. The exclusion section details the types of property that are covered under the policy. B. The exclusion section specifies what types of losses or damages are not covered by the policy. C. The exclusion section provides additional coverage options that can be added to the policy. D. The exclusion section outlines the benefits that are automatically included in the policy. Correct answer: B. The exclusion section specifies what types of losses or damages are not covered by the policy. Explanation: the exclusion section of a homeowner's insurance policy lists specific risks or types of damage that are not covered under the policy. Understanding these exclusions is crucial for policyholders to know what is not protected and to avoid unexpected gaps in coverage. Option A is incorrect because the exclusion section does not detail what is covered but rather what is not covered. Option C is incorrect as exclusions do not provide additional coverage options. Option D is incorrect because the exclusion section does not outline automatic benefits but rather limitations on coverage. Question 42. John, a Kentucky homeowner, has a dwelling policy DP3 with the following coverage limits: dwelling coverage of $250,000, other structures coverage of $30,000, and personal property coverage of $70,000. After a severe storm, John's home sustains $260,000 in damage, his detached garage incurs $35,000 in damage, and his personal property loss totals $80,000. Additionally, John incurs $6,000 in loss of use expenses. How much will John's dwelling policy DP3 pay out in total, considering the $1,000 deductible and applying the coverage limits? A. $250,000 for the dwelling limit, $30,000 for the detached garage limit, $70,000 for personal property, and $6,000 for loss of use, totaling $356,000 minus $1,000 deductible. B. $250,000 for the dwelling limit, $30,000 for the detached garage limit, $70,000 for personal property, and $6,000 for loss of use, totaling $356,000 with no deductible. C. $250,000 for the dwelling limit, $30,000 for the detached garage limit, $70,000 for personal property, and $6,000 for loss of use, totaling $356,000 minus $1,000 deductible. D. $250,000 for the dwelling limit, $30,000 for the detached garage limit, $70,000 for personal property limit, and $6,000 for loss of use, totaling $356,000 minus $1,000 deductible. Correct answer: A. $250,000 for the dwelling limit, $30,000 for the detached garage limit, $70,000 for personal property, and $6,000 for loss of use, totaling $356,000 minus $1,000 deductible. Explanation: John's dwelling policy DP3 has specific coverage limits. Dwelling coverage, $250,000 limit, so it covers up to this amount. Other structures coverage, $30,000 limit, so it covers up to this amount. Personal property coverage, $70,000 limit, but John's loss is $80,000. The policy will cover up to the limit. Loss of use coverage, $6,000 actual expense incurred. The total payout is dwelling, $250,000 limit, other structures, $30,000 limit, personal property, $70,000 limit, loss of use, $6,000. Total equal $250,000 plus $30,000 plus $70,000 plus $6,000 equals $356,000. After applying the $1,000 deductible, the payout is $355,000. Option B is incorrect as the deductible must be applied. Option C is repeated with incorrect deductible application. Option D is incorrect because it is the same as C and does not account for the deductible. Question 43. In Kentucky, which of the following is a primary benefit of an endorsement ECA homeowners insurance policy? A. An endorsement provides additional coverage for risks that are typically excluded from the standard policy. B. An endorsement reduces the premium cost by eliminating coverage options. C. An endorsement modifies the policy's deductible amount. D. An endorsement outlines the payment schedule for premium installments. Correct answer: A. An endorsement provides additional coverage for risks that are typically excluded from the standard policy. Explanation: endorsements are additions to a standard homeowners insurance policy that modify or enhance coverage. They can add protection for risks that are not covered by the base policy, such as coverage for high-value items, natural disasters, or other specific needs. Option B is incorrect because endorsements generally add coverage rather than remove it or reduce premiums. Option C is incorrect as endorsements do not usually modify deductibles, but adjust coverage. Option D is incorrect because endorsements do not deal with premium payment schedules, but with coverage changes. Question 44. What is the primary difference between actual cash value and replacement cost? C. Coverage in a personal auto policy PAP in Kentucky. A CV coverage reimburses the insured based on the current market value of the vehicle minus depreciation, while RC coverage pays for the cost to replace the vehicle with a new one of similar type without depreciation. BACV coverage pays the full amount for vehicle repairs, while RC coverage only reimburses for the cost of parts. CACV coverage includes an additional amount for rental vehicle costs, while RC coverage does not. DACV coverage is generally higher than RC coverage due to its broader scope. Correct answer. AACV coverage reimburses the insured based on the current market value of the vehicle minus depreciation, while RC coverage pays for the cost to replace the vehicle with a new one of similar type without depreciation. Explanation. Actual cash value SCV coverage takes into account depreciation and reimburses the insured based on the current market value of the vehicle replacement cost. RC coverage, on the other hand, covers the cost to replace the vehicle with a new one of similar type and quality without deducting for depreciation. Option B is incorrect because CV and RC coverage both deal with vehicle value rather than repair parts. Option C is incorrect as rental vehicle coverage is typically separate from ACV and RC coverage. Option D is incorrect because RC coverage is usually higher than ACV coverage due to the replacement value being higher than depreciated value. Question 45. Sarah, a Kentucky resident, has a dwelling policy DPA 2 with the following limits. Dwelling coverage of $180,000, other structures coverage of $25,000, and personal property coverage of $60,000. After windstorm, Sarah's home sustains $190,000 in damage, a detached garage incurs $20,000 in damage, and her personal property loss totals $65,000. Additionally, Sarah incurs $8,000 in loss of use expenses. How much will Sarah's dwelling policy DPA 2 pay out in total considering the $1,000 deductible and applying the coverage limits? A. $180,000 for the dwelling limit, $20,000 for the detached garage, $60,000 for personal property, and $8,000 for loss of use, totaling $268,000 minus $1,000 deductible. B. $180,000 for the dwelling limit, $20,000 for the detached garage, $60,000 for personal property, and $8,000 for loss of use, totaling $268,000 with no deductible. C. $180,000 for the dwelling limit, $25,000 for the detached garage limit, $60,000 for personal property, and $8,000 for loss of use, totaling $273,000 minus $1,000 deductible. D. $180,000 for the dwelling limit, $25,000 for the detached garage limit, $60,000 for personal property limit, and then $8,000 for loss of use, totaling $273,000 minus $1,000 deductible. Correct answer. A. $180,000 for the dwelling limit, $20,000 for the detached garage, $60,000 for personal property, and $8,000 for loss of use, totaling $268,000 minus $1,000 deductible. Explanation. Sarah's dwelling policy DPA 2 has specific coverage limits. Dwelling coverage, $180,000 limit, so it covers up to this amount. Other structures coverage, $25,000 limit, but damage was $20,000, which is within the limit. Personal property coverage, $60,000 limit, but loss was $65,000. The policy will cover up to the limit. Loss of use coverage, $8,000 actual expense incurred. The total payout is dwelling, $180,000 limit. Other structures, $20,000 actual damage within limit. Personal property, $60,000 limit. Loss of use, $8,000. Total equals $180,000 plus $20,000 plus $60,000 plus $8,000 equals $268,000. After applying the $1,000 deductible, the payout is $267,000. Option B is incorrect because the deductible must be applied. Option C and D are incorrect as they incorrectly state the coverage for the detached garage and the deductible application. Question 46. in Kentucky, what is a primary benefit of adding a home business endorsement to a homeowner's insurance policy? A. It provides liability coverage for injuries and damages that occur as a result of business activities conducted on the property. B. It increases the coverage limit for personal property within the home, regardless of whether the property is used for business purposes. C. It covers losses due to natural disasters, such as floods and earthquakes, which are not included in a standard homeowner's insurance policy. D. It reduces the premium cost for homeowners who run a business from their home. Correct answer. A. Provides liability coverage for injuries and damages that occur as a result of business activities conducted on the property. Explanation. A home business endorsement is designed to extend liability coverage specifically for risks associated with running a business from home. This endorsement covers injuries and damages related to business activities that occur on the property which are not typically covered under a standard homeowner's insurance policy. Option B is incorrect because the endorsement specifically addresses business-related liability rather than increasing coverage for personal property. Option C is incorrect as it does not address natural disaster coverage, which usually requires separate policies. Option D is incorrect because the endorsement does not necessarily reduce premiums but provides additional coverage. Question 47. Under the National Flood Insurance Program, NFIP, in Kentucky, which of the following statements accurately describes the increased cost of compliance like coverage? A. ICC coverage provides financial assistance for the repair of flood-damaged property to its pre-flood condition. B. ICC coverage helps pay for the costs of elevating, demolishing, or relocating a structure to comply with floodplain management requirements. C. ICC coverage is only available if the property is located in a designated flood zone. D. ICC coverage is automatically included in all standard flood insurance policies without additional cost. Correct answer. B. ICC coverage helps pay for the costs of elevating, demolishing, or relocating a structure to comply with floodplain management requirements. Explanation. Increased cost of compliance like coverage is designed to assist property owners with the costs associated with bringing a structure into compliance with local floodplain management regulations following a flood loss. This coverage helps cover expenses related to elevating, demolishing, or relocating a flood-damaged building. Option A is incorrect because ICC coverage is not for repairing property but for compliance-related expenses. Option C is incorrect as ICC coverage is available for properties affected by flood loss, regardless of flood zone designation. Option D is incorrect because ICC coverage is not automatically included and typically requires an additional premium. Question 40. Alex, a Kentucky homeowner, has a dwelling policy D1 with coverage limits as follows. Dwelling coverage of $150,000, other structures coverage of $20,000, and personal property coverage of $40,000. After severe storm, Alex's home sustains $160,000 in damage. His detached garage incurs $22,000 in damage, and his personal property loss totals $50,000. Additionally, Alex incurs $5,000 in loss of use expenses. How much will Alex's dwelling policy D1 pay out in total considering the $1,000 deductible and applying the coverage limits? A. $150,000 for the dwelling limit, $20,000 for the detached garage, $40,000 for personal property, and $5,000 for loss of use, totaling $215,000 minus $1,000 deductible. B. $150,000 for the dwelling limit, $20,000 for the detached garage, $40,000 for personal property, and $5,000 for loss of use, totaling $215,000 with no deductible. C. $150,000 for the dwelling limit, $20,000 for the detached garage limit, $40,000 for personal property, and $5,000 for loss of use, totaling $215,000 minus $1,000 deductible. D. $150,000 for the dwelling limit, $20,000 for the detached garage, $40,000 for personal property limit, and $5,000 for loss of use, totaling $215,000 minus $1,000 deductible. Correct answer. A. $150,000 for the dwelling limit, $20,000 for the detached garage, $40,000 for personal property, and $5,000 for loss of use, totaling $215,000 minus $1,000 deductible. Explanation. Alex's dwelling policy D1 provides coverage limits as follows. Dwelling coverage, $150,000 limit, so it covers up to this amount. Other structures coverage, $20,000 limit, but the damage was $22,000. The policy will cover up to the limit. Personal property coverage, $40,000 limit, but the loss was $50,000. The policy will cover up to the limit. Loss of use coverage, $5,000 actual expense incurred. The total payout is dwelling, $150,000 limit. Other structures, $20,000 limit. Personal property, $40,000 limit. Loss of use, $5,000. Total equals $150,000 plus $20,000 plus $40,000 plus $5,000 equals $115,000. After applying the $1,000 deductible, the payout is $214,000. Option B is incorrect as the deductible must be applied. Options C and D are incorrect as they repeat the incorrect deductible application. Question 49. In Kentucky, what does the loss of use coverage in a homeowner's insurance policy typically cover? A. It provides financial assistance for repairing or replacing damaged property. B. It covers additional living expenses incurred when a covered loss makes the home uninhabitable. C. It compensates for the loss of rental income if the insured property is used for rental purposes. D. It offers reimbursement for the cost of legal defense and liability claims related to homeownership. Correct answer. B. It covers additional living expenses incurred when a covered loss makes the home uninhabitable. Explanation. Loss of use coverage, also known as additional living expenses, helps cover the costs of temporary living arrangements and other necessary expenses when a covered loss makes the insured home uninhabitable. This can include hotel bills, restaurant meals, and other costs incurred while the home is being repaired. Option A is incorrect because loss of use coverage is not for repairing or replacing damaged property but for additional living costs. Option C is incorrect as loss of use does not cover loss of rental income but rather additional living expenses. Option D is incorrect because it does not relate to legal defense but to living expenses during repairs. Question 50. In Kentucky, how does a personal umbrella policy, PUP, extend beyond the limits of a standard homeowners or auto insurance policy? A. It provides coverage for only specific types of claims such as property damage or bodily injury. B. It covers gaps in coverage and increases liability limits above those provided by underlying policies. C. It replaces the need for underlying policies by covering all types of losses directly. D. It reduces the deductibles for underlying homeowners or auto insurance policies. Correct answer. B. It covers gaps in coverage and increases liability limits above those provided by underlying policies. Explanation. A personal umbrella policy, PUP, provides additional liability coverage above the limits of existing homeowners or auto insurance policies. It extends coverage to gaps that may not be addressed by underlying policies, such as high liability claims for bodily injury or property damage. Option A is incorrect because a PUP does not limit coverage to specific types of claims but provides broad liability coverage. Option C is incorrect as it does not replace underlying policies but enhances their coverage. Option D is incorrect because a PUP does not affect deductibles but increases liability limits. Question 51. Emily, a Kentucky homeowner, has a dwelling policy DP3 with the following coverage limits. Dwelling coverage of $200,000, other structures coverage of $30,000, and personal property coverage of $75,000. After a fire, Emily's home incurs $220,000 in damage, her detached garage has $35,000 in damage, and her personal property loss totals $80,000. Additionally, Emily incurs $7,000 in loss of use expenses. How much will Emily's dwelling policy DP3 pay out in total considering the $1,000 deductible and applying the coverage limits? A. $200,000 for the dwelling limit, $30,000 for the detached garage, $75,000 for personal property, and $7,000 for loss of use, totaling $312,000 minus $1,000 deductible. B. $200,000 for the dwelling limit, $30,000 for the detached garage limit, $75,000 for personal property limit, and $7,000 for loss of use, totaling $312,000 minus $1,000 deductible. C. $200,000 for the dwelling limit, $30,000 for the detached garage, $75,000 for personal property, and $7,000 for loss of use, totaling $312,000 with no deductible. D. $200,000 for the dwelling limit, $30,000 for the detached garage limit, $75,000 for personal property limit, and $7,000 for loss of use, totaling $312,000 with no deductible. Correct answer: A. $200,000 for the dwelling limit, $30,000 for the detached garage, $75,000 for personal property, and $7,000 for loss of use, totaling $312,000 minus $1,000 deductible. Explanation: Emily's dwelling policy DPA 3 coverage limits are dwelling coverage $200,000 limit, so it covers up to this amount. Other structures coverage $30,000 limit, but the damage was $35,000. The policy will cover up to the limit. Personal property coverage $75,000 limit, but the loss was $80,000. The policy will cover up to the limit. Loss of use coverage $7,000 actual expense incurred. Total payout calculation dwelling $200,000 limit. Other structures $30,000 limit. Personal property $75,000 limit. Loss of use $7,000. Total equals $200,000 plus $30,000 plus $75,000 plus $7,000 equals $312,000. After applying the $1,000 deductible, the payout is $311,000. Option B is incorrect because the deductible must be applied. Options C and D are incorrect as they do not account for the deductible. Question 52. In Kentucky, what is the main purpose of the extended replacement cost to endorsement on a homeowner's insurance policy? A. It increases the coverage limit for personal property beyond the standard policy limit. B. It extends the amount payable for dwelling repairs or replacement beyond the policy limit, typically by a percentage. C. It provides coverage for liability claims exceeding the standard policy limits. D. It reduces the deductible amount for dwelling coverage claims. Correct answer: B. It extends the amount payable for dwelling repairs or replacement beyond the policy limit, typically by a percentage. Explanation: The extended replacement cost endorsement increases the coverage limit for dwelling repairs or replacement beyond the standard policy limit, usually by a specific percentage, e.g., 20% or 25%. This endorsement is useful when repair or replacement costs exceed the standard policy limit due to increased construction costs. Option A is incorrect because extended replacement cost does not pertain to personal property limits but to dwelling coverage. Option C is incorrect as it pertains to liability coverage, not dwelling coverage. Option D is incorrect because it does not affect the deductible amount. Question 53. In Kentucky, what is a key feature of scheduled personal property coverage in a homeowner's insurance policy? A. It provides blanket coverage for all personal belongings within the home without specific limits. B. It offers higher limits of coverage for valuable items, such as jewelry or fine art, by listing them individually in the policy. C. It covers personal property only if it is damaged or stolen while outside the home. D. It eliminates the need for a separate personal articles floater policy for high-value items. Correct answer: B. It offers higher limits of coverage for valuable items, such as jewelry or fine art, by listing them individually in the policy. Explanation: Scheduled personal property coverage provides higher limits of coverage for specific valuable items by listing them individually on the policy. This ensures that high-value items such as jewelry, art, or collectibles are covered for their full value, often with fewer exclusions compared to standard personal property coverage. Option A is incorrect because scheduled personal property does not offer blanket coverage but specifies individual items. Option C is incorrect as it covers items within the home rather than only when outside. Option D is incorrect because scheduled personal property enhances coverage but does not eliminate the need for a separate personal articles floater if additional coverage is required. Question 54. James, a Kentucky resident, has a personal auto policy PAP with the following coverage: liability coverage of $100,000 per person, $300,000 per accident, medical payments coverage of $5,000 per person, and uninsured underinsured motorist coverage of $50,000 per person, $100,000 per accident. After a collision with an uninsured driver, James suffers $60,000 in medical expenses and $30,000 in vehicle damage. The other driver is at fault and uninsured. What amount will James's insurance cover for his medical expenses and vehicle damage, assuming the uninsured motorist coverage limits are applied? A. $50,000 for medical expenses, uninsured motorist coverage limit, and $30,000 for vehicle damage, covered under collision coverage. B. $60,000 for medical expenses, uninsured motorist coverage limit, and $30,000 for vehicle damage, uninsured motorist coverage applies. C. $50,000 for medical expenses, uninsured motorist coverage limit, and $30,000 for vehicle damage, covered under medical payments coverage. D. $60,000 for medical expenses, covered under medical payments coverage, and $30,000 for vehicle damage, uninsured motorist coverage applies. Correct answer A. $50,000 for medical expenses, uninsured motorist coverage limit, and $30,000 for vehicle damage, covered under collision coverage. Explanation: James's uninsured motorist coverage will cover up to $50,000 for his medical expenses, as that is the limit for medical costs under this coverage. However, the vehicle damage is typically covered under collision coverage, which is separate from uninsured motorist coverage. If James had collision coverage, it would cover the $30,000 vehicle damage. Option B is incorrect because the uninsured motorist coverage has a $50,000 limit for medical expenses, not $60,000, and vehicle damage is not covered under uninsured motorist coverage. Option C is incorrect because medical payments coverage does not cover vehicle damage. Option D is incorrect as medical payments coverage does not cover vehicle damage. Instead, collision coverage would. Question 55. In Kentucky, which of the following is true about coverage C? Personal property, EICA homeowners insurance policy. A. It provides replacement cost coverage for personal property without any limits. B. It covers personal property at replacement cost, but only for specified perils listed in the policy. C. It offers actual cash value coverage for personal property, which includes depreciation. D. It automatically covers personal property located off premises for up to 50% of the coverage C limit. Correct answer: C. It offers actual cash value coverage for personal property, which includes depreciation. Explanation: Coverage C. Personal property in a standard homeowner's insurance policy typically provides coverage for personal property on an actual cash value (CV) basis, which includes depreciation. This means that the payout for personal property losses will be the replacement cost minus depreciation. Option A is incorrect because personal property coverage is not unlimited and may have specific limits. Option B is incorrect because personal property coverage under a standard policy is usually on an ACV basis unless a replacement cost endorsement is added. Option D is incorrect because off-premises coverage typically extends up to 10% to 20% of the coverage C limit, not automatically 50%. Question 56. In Kentucky, which of the following accurately describes the purpose of a liability coverage EICA personal auto policy, PAP? A. It provides financial protection for damage to the insured's vehicle due to collision with another vehicle. B. It covers medical expenses for the insured and passengers in the event of an accident. C. It protects the insured from financial loss if they are legally liable for bodily injury or property damage to others. D. It compensates for the loss of income due to an inability to drive the insured vehicle after an accident. Correct answer: C. It protects the insured from financial loss if they are legally liable for bodily injury or property damage to others. Explanation: Liability coverage in a personal auto policy PAP provides financial protection for the insured if they are legally responsible for causing bodily injury or property damage to others in an accident. This coverage includes both bodily injury liability and property damage liability. Option A is incorrect because damage to the insured's vehicle is covered under collision coverage, not liability coverage. Option B is incorrect because medical expenses for the insured and passengers are covered under medical payments coverage or personal injury protection (PIP), not liability coverage. Option D is incorrect as it does not relate to liability coverage but to loss of use or rental reimbursement coverage. Question 57. Linda, a Kentucky homeowner, has a dwelling policy DEPA 2 with coverage dwelling at $180,000, coverage B, other structures at $25,000, and coverage C, personal property at $50,000. After a burglary, Linda discovers that her personal property is valued at $55,000, her detached garage has $20,000 in damage, and there is a $4,000 loss in additional living expenses due to temporary relocation. How much will Linda's dwelling policy DEPA 2 Cover considering the policy limits and a $1,000 deductible, a $180,000 for the dwelling limit, $20,000 for the detached garage, $50,000 for personal property, and $4,000 for additional living expenses, totaling $254,000 minus $1,000 deductible. B. $180,000 for the dwelling limit, $20,000 for the detached garage limit, $50,000 for personal property limit, and $4,000 for additional living expenses, totaling $254,000 minus $1,000 deductible. C. $180,000 for the dwelling limit, $25,000 for the detached garage, $50,000 for personal property limit, and $4,000 for additional living expenses, totaling $259,000 minus $1,000 deductible. D. $180,000 for the dwelling limit, $25,000 for the detached garage limit, $55,000 for personal property limit, and $4,000 for additional living expenses, totaling $264,000 minus $1,000 deductible. Correct answer, a $180,000 for the dwelling limit, $20,000 for the detached garage, $50,000 for personal property, and $4,000 for additional living expenses, totaling $254,000 minus $1,000 deductible. Explanation. Linda's dwelling policy DPA2 covers dwelling, $180,000 limit, so it covers up to this amount. Other structures, $20,000 limit and damage was $20,000, so it covers the full amount. Personal property, $50,000 limit and property value is $55,000, so it covers up to the limit. Additional living expenses, $4,000 actual expense incurred. Total cover equals $180,000 plus $20,000 plus $50,000 plus $4,000 is equals $254,000. After applying the $1,000 deductible, the payout is $253,000. Option B is incorrect because it repeats the deductible application. Option C is incorrect due to the incorrect limit for the detached garage. Option D is incorrect as it includes a higher personal property limit than what is provided by the policy. Question 58. In Kentucky, what is a key difference between named perils and open perils coverage in a homeowner's insurance policy? A. Named perils coverage protects against all risks except those specifically excluded, while open perils coverage only protects against risks listed in the policy. B. Named perils coverage only covers risks specifically listed in the policy, while open perils coverage protects against all risks except those specifically excluded. C. Named perils coverage provides higher coverage limits than open perils coverage. D. Named perils coverage is only available for personal property, while open perils coverage is available for dwelling coverage. Correct answer. B. Named perils coverage only covers risks specifically listed in the policy, while open perils coverage protects against all risks except those specifically excluded. Explanation. Named perils coverage only protects against the specific risks explicitly listed in the policy, such as fire, theft, or vandalism. In contrast, open perils or special perils coverage provides broader protection by covering all risks unless specifically excluded by the policy. This generally offers more extensive coverage compared to named perils. Option A is incorrect because it reverses the definitions of named perils and open perils coverage. Option C is incorrect as coverage limits are not inherently tied to named or open perils coverage types. Option D is incorrect because named perils and open perils can apply to both personal property and dwelling coverage. Question 59. In Kentucky, which of the following statements about the personal articles floater is true? A. It is designed to provide coverage for personal property while it is located on the insured's premises only. B. It is typically used to insure valuable items, such as jewelry, fine art, and collectibles for their full replacement value with broader coverage than standard homeowners insurance. C. It offers coverage for personal property against specific perils only and does not cover accidental loss or damage. D. It automatically includes coverage for any item worth more than $1,000 without the need for separate listing on the policy. Correct answer. B. It is typically used to insure valuable items such as jewelry, fine art, and collectibles for their full replacement value with broader coverage than standard homeowners insurance. Explanation. A personal articles floater is a type of endorsement or separate policy that provides coverage for high-value items like jewelry, art, and collectibles. It offers broader protection and full replacement value, covering accidental loss or damage, often without the limitations and exclusions of standard homeowners insurance. Option A is incorrect because the floater provides coverage both on and off the premises. Option C is incorrect as it provides broader coverage than just specific perils, including accidental loss. Option D is incorrect because valuable items need to be specifically scheduled or listed for coverage under a personal articles floater. Question 60. Michael, a Kentucky resident, has a personal auto policy PAP with the following coverages: liability coverage of $250,000 per person, $500,000 per accident, medical payments coverage of $10,000 per person, and uninsured motorist coverage of $100,000 per person, $300,000 per accident. After an accident with an underinsured driver, Michael incurs $90,000 in medical expenses and $25,000 in property damage. The at-fault driver has $50,000 in liability coverage, and Michael's vehicle damage exceeds the driver's coverage limit. What amount will Michael's insurance cover for his medical expenses and vehicle damage, considering the underinsured motorist coverage limits and the liability coverage of the at-fault driver? A. $90,000 for medical expenses, uninsured motorist coverage, $25,000 for vehicle damage, uninsured motorist coverage, and $50,000 for vehicle damage liability of the at-fault driver, totaling $165,000. B. $90,000 for medical expenses, uninsured motorist coverage, and $25,000 for vehicle damage liability of the at-fault driver, totaling $115,000. C. $50,000 for medical expenses, liability of the at-fault driver, and $25,000 for vehicle damage, covered under uninsured motorist coverage, totaling $75,000. D. $90,000 for medical expenses, medical payments coverage, $25,000 for vehicle damage, covered under uninsured motorist coverage, totaling $115,000. Correct answer A. $90,000 for medical expenses, uninsured motorist coverage, $25,000 for vehicle damage, uninsured motorist coverage, and $50,000 for vehicle damage liability of the at-fault driver, totaling $165,000. Explanation: Michael's uninsured motorist coverage can cover up to $100,000 per person for medical expenses. Since his medical expenses are $90,000, it will cover the full amount. For vehicle damage, the at-fault driver's liability covers $50,000, and the remaining $25,000 of the vehicle damage would be covered by Michael's uninsured motorist coverage, as the driver's liability doesn't fully cover the damage. Total payout: medical expenses $90,000, uninsured motorist coverage, vehicle damage $50,000, at-fault driver's liability plus $25,000 uninsured motorist cover equals $75,000. Total equals $90,000 plus $75,000 equals $165,000. Option B is incorrect because it does not account for the full uninsured motorist coverage for vehicle damage. Option C is incorrect as it misapplies coverage types. Option D is incorrect because medical payments coverage does not cover vehicle damage. Question 61. In Kentucky, what is the primary purpose of the loss of use coverage in a homeowner's insurance policy? A. To provide financial assistance for the repair or replacement of the dwelling after a covered loss. B. To cover the cost of temporary housing and additional living expenses if the insured home becomes uninhabitable due to a covered peril. C. To compensate for the loss of personal property that is damaged or stolen during a covered event. D. To cover liability claims made against the insured for injuries or damages occurring on the insured property. Correct answer: B. To cover the cost of temporary housing and additional living expenses if the insured home becomes uninhabitable due to a covered peril. Explanation: loss of use coverage, also known as additional living expenses (IL) coverage, is designed to reimburse the policyholder for temporary housing and increased living expenses if the insured home becomes uninhabitable due to a covered loss, such as a fire or severe storm. This ensures that the insured has financial support for living arrangements while their home is being repaired or rebuilt. Option A is incorrect because the repair or replacement of the dwelling is covered under dwelling coverage, not loss of use. Option C is incorrect as it pertains to personal property coverage. Option D is incorrect because liability claims are covered under liability coverage. Question 62. Which of the following accurately describes the purpose of a self-insured retention EICA personal umbrella policy? A. It is the amount the insurer will deduct from the total claim payment before coverage applies. B. It represents the amount of money the insured must pay out of pocket before the umbrella policy begins to provide additional coverage. C. It is the maximum amount the umbrella policy will cover for any single claim. D. It is the premium amount paid for the umbrella policy coverage. Correct answer. B. It represents the amount of money the insured must pay out of pocket before the umbrella policy begins to provide additional coverage. Explanation. A self-insured retention, sir, in a personal umbrella policy is the amount the policyholder must pay out of pocket before the umbrella policy provides additional coverage beyond the limits of underlying policies, such as auto or homeowners insurance. It functions as a form of deductible for the umbrella policy. Option A is incorrect because the SIR is not deducted from the claim payment but is an amount the insured pays before coverage kicks in. Option C is incorrect because it describes the coverage limit, not the SIR. Option D is incorrect as it refers to the policy premium, not the SIR. Question 63. Emily, a Kentucky homeowner, as a dwelling policy DP3 with the following coverage: dwelling coverage of $200,000, other structures coverage of $30,000, and personal property coverage of $60,000. A severe storm causes significant damage to her home and other structures, resulting in the following losses: $25,000 damage to the dwelling, $20,000 damage to a detached shed, and $65,000 in damage to personal property. Additionally, Emily incurs $5,000 in additional living expenses due to temporary relocation. How much will Emily's dwelling policy DP3 cover considering the policy limits and a $1,500 deductible, a $25,000 for dwelling damage, $20,000 for other structures, $60,000 for personal property, and $5,000 for additional living expenses, totaling $110,000 minus $1,500 deductible? B. $25,000 for dwelling damage, $20,000 for other structures, $60,000 for personal property, and $5,000 for additional living expenses, totaling $110,000 minus $1,500 deductible. C. $25,000 for dwelling damage, $20,000 for other structures, $60,000 for personal property, and $5,000 for additional living expenses, totaling $110,000 minus $1,500 deductible. D. $25,000 for dwelling damage, $30,000 for other structures, limit, $60,000 for personal property, and $5,000 for additional living expenses, totaling $110,000 minus $1,500 deductible. Correct answer: A. $25,000 for dwelling damage, $20,000 for other structures, $60,000 for personal property, and $5,000 for additional living expenses, totaling $110,000 minus $1,500 deductible. Explanation. Under the DP3 policy, dwelling coverage, $25,000 within limit of $200,000. Other structures coverage, $20,000 within limit of $30,000. Personal property coverage, $60,000 within limit of $60,000. Additional living expenses, $5,000 extra expense. Total coverage amount, $25,000 plus $20,000 plus $60,000 plus $5,000 equals $110,000. After applying the $1,500 deductible, the payout is $108,500. Option B, C, and D are incorrect because they do not reflect the correct deductible application or coverage limits. Question 64. MS. Carter is involved in a car accident where she is at fault and the damages exceed her liability coverage limit. Her policy includes a $50,000 liability limit per accident, but the damages amount to $70,000. MS. Carter also has uninsured and insured motorist coverage with a limit of $100,000. Which coverage will apply to the excess amount in this situation? A. Liability coverage, Part A. B. Medical payments coverage, Part B. C. Uninsured and insured motorist coverage, Part C. D. Coverage for damage to your auto, Part D. Correct answer. C. Uninsured and insured motorist coverage, Part C. Explanation. In the scenario MS. Carter's liability coverage under Part A is insufficient to cover the total damages of $70,000. Since she is at fault, her liability coverage will cover the damages up to its limit, which is $50,000. The excess amount, which is $20,000, falls under the underinsured motorist coverage, Part C, This coverage helps fill the gap between the at-fault driver's liability coverage and the total damages if the at-fault driver's coverage is insufficient. Medical payments coverage, Part B, is for covering medical expenses and not for property damage. Coverage for damage to your auto, Part D, is used for repairing or replacing Ms. Carter's vehicle and not for damages to other parties. Question 65. Which of the following statements about loss of use coverage under standard homeowners policy is accurate? A. Loss of use coverage provides reimbursement for lost income from a rental property. B. Loss of use coverage pays for increased living expenses if the home becomes uninhabitable due to a covered peril. C. Loss of use coverage is only available if the policyholder has an additional endorsement. D. Loss of use coverage compensates for damage to personal property while the home is being repaired. Correct answer. B. Loss of use coverage pays for increased living expenses if the home becomes uninhabitable due to a covered peril. Explanation. Loss of use coverage. Coverage D is designed to reimburse the policyholder for increased living expenses when their home becomes uninhabitable due to a covered loss, such as a fire or severe storm. This coverage helps the policyholder maintain their standard of living while their home is being repaired. It does not cover lost income from rental properties, nor does it require an additional endorsement as it is part of standard homeowners policies. It also does not cover damage to personal property. That would be addressed under personal property coverage, coverage C. Question 66. Mr. Thompson owns a rental property and has a E3 policy. A tenant accidentally starts a fire that damages both the dwelling and Mr. Thompson's personal belongings, stored in a separate shed on the property. What type of coverage will address the damage to Mr. Thompson's personal belongings? A. Dwelling coverage, coverage A. B. Other structures coverage, coverage B. C. Personal property coverage, coverage C. D. Fair rental value coverage, coverage D. Correct answer. C. Personal property coverage, coverage C. Explanation. In a D3 policy, personal property coverage, coverage C is not included as a standard part of the policy. However, Mr. Thompson's personal belongings would be covered under this type of policy if he has purchased this additional coverage. Dwelling coverage, coverage A, protects the physical structure of the dwelling. Other structures coverage, coverage B, covers structures on the property that are not attached to the dwelling, such as the shed, but not the personal belongings inside. Fair rental value coverage, coverage D, compensates for lost rental income if the property becomes uninhabitable, but it does not cover personal property. Therefore, Mr. Thompson should insure it as personal property coverage, coverage C, or an equivalent endorsement for his belongings. Question 67. Under a standard homeowners policy, which of the following is typically NOT covered under personal liability coverage? A. Medical expenses for injuries sustained by a guest on the policyholder's property. B. Legal defense costs for claims of negligence leading to property damage. C. Damages awarded for libel or slander. D. Injuries caused by a pet owned by the policyholder. Correct answer. C. Damages awarded for libel or slander. Explanation. Personal liability coverage under a homeowner's policy generally covers injuries or property damage for which the policyholder is legally responsible. This includes medical expenses for injuries sustained by guests, legal defense costs for claims of negligence, and damages for injuries caused by pets. However, libel and slander are typically excluded from standard liability coverage. Coverage for defamation claims, such as libel or slander, usually requires specific endorsement or separate insurance policies designed to handle such risks. Question 68. A tenant's personal property is damaged in a fire at a rented apartment. Under a standard dwelling policy D1, which type of coverage would typically address the tenant's loss? A. Dwelling coverage, coverage A. B. Personal property coverage, coverage C. C. Fair rental value coverage, coverage D. D. Other structures coverage, coverage B. Correct answer. B. Personal property coverage, coverage C. Explanation. Under standard dwelling policy D1, personal property coverage, coverage C, is designed to protect the tenant's personal belongings. Coverage where dwelling coverage covers the physical structure of the rental property, which is the landlord's responsibility. Fair rental value coverage, coverage D, compensates the landlord for lost rental income if the property becomes uninhabitable. Other structures coverage, coverage B, covers structures on the property not attached to the dwelling but does not apply to personal belongings inside the rental. Therefore, for tenants' personal property damage, coverage C is the relevant protection. Question 69. Jane has a personal umbrella policy with a $1 million limit and a self-insured retention of $250,000. If she is found liable for $1.5 million in damages, how much will her umbrella policy contribute? A. $250,000. B. $750,000. C. $1 million. D. $1,250,000. Correct answer. B. $750,000. Explanation. A personal umbrella policy provides additional coverage above the limits of underlying policies and includes a self-insured retention amount. In this case, Jane's umbrella policy has a self-insured retention of $250,000, which she must pay before the umbrella policy kicks in. Given a liability of $1.5 million, the umbrella policy will cover the amount above the $250,000 retention, which is $1.25 million. However, since her umbrella limit is $1 million, it will cover up to $1 million, leaving $250,000 of the remaining $1.25 million unpaid. Therefore, the umbrella policy contributes $750,000. Question 70. Which of the following is a key feature of the National Flood Insurance Program (NFIP)? A. Coverage for earthquake damage to buildings. B. Coverage for personal property and areas of the home not exposed to flooding. C. Reimbursement for costs related to building code compliance after a flood. D. Coverage for damages caused by watercraft during a flood. Question 70. Which of the following is a key feature of the National Flood Insurance Program (NFIP)? A. Coverage for earthquake damage to buildings. B. Coverage for personal property and areas of the home not exposed to flooding. C. Reimbursement for costs related to building code compliance after a flood. D. Coverage for damages caused by watercraft during a flood. Question 71. A policyholder has a homeowner's policy with a $500,000 dwelling coverage limit and a 2% deductible for windstorm damage. If a windstorm causes $30,000 in damage to the dwelling, how much will the policyholder need to pay out of pocket for the deductible? A. $500. B. $1,000. C. $2,000. D. $3,000. Correct answer. D. $3,000. Explanation. The deductible for windstorm damage is calculated as a percentage of the dwelling coverage limit. In this case, the deductible is 2% of the $500,000 dwelling coverage limit, which amounts to $10,000. However, the damage is only $30,000. The deductible amount is $10,000, but since the total damage does not exceed this amount, the policyholder will only need to pay $3,000, which is 2% of the actual damage cost. Question 72. Which of the following is true about the coverage for personal property under a standard dwelling policy? DEPA 2. A. Personal property is automatically covered without additional endorsement. B. Personal property is covered only if the property is located in a separate structure on the premises. C. Personal property is covered, but only for named perils specified in the policy. D. Personal property coverage is not available under the DEPA 2 policy. Correct answer. C. Personal property is covered, but only for named perils specified in the policy. Explanation. In a standard dwelling policy DEPA 2, coverage for personal property is included, but it is on a named perils basis. This means that personal property is only covered for the perils explicitly listed in the policy, such as fire, lightning, or windstorm. This is different from the DEPA 3 policy, which provides open perils coverage for personal property. The DEPA 2 policy does not automatically include personal property coverage without endorsement and does not cover personal property located in separate structures on the premises. Question 73. Mr. Johnson's property insurance policy has a $500,000 limit on dwelling coverage and includes a 10% coverage limit for other structures. If Mr. Johnson has a detached garage that is destroyed by a covered peril, how much will his policy cover for the damage to the garage? A. $5,000. B. $50,000. C. $100,000. D. $150,000. Correct answer. B. $50,000. Explanation. Under the dwelling coverage of Mr. Johnson's property insurance policy, there is a limit of 10% for other structures, such as a detached garage. This means the policy will cover up to 10% of the dwelling coverage limit for other structures. With a $500,000 dwelling coverage limit, 10% equates to $50,000. Therefore, the policy will cover up to $50,000 for damage to the detached garage. Question 74. In the context of insurance regulation, what is the primary purpose of the National Association of Insurance Commissioners (NAIC)? A. To establish federal insurance laws and regulations. B. To provide consumer protection through state-level insurance oversight. C. To develop model laws and regulations for insurance that states can adopt. D. To directly regulate insurance companies and enforce compliance. Correct answer: C. To develop model laws and regulations for insurance that states can adopt. Explanation: the National Association of Insurance Commissioners (NAIC) is an organization of state insurance regulators that develops model laws and regulations for the insurance industry. While the NAIC does not have regulatory authority itself, its model laws and guidelines serve as the basis for state insurance departments to adopt and enforce regulations. The NAIC's primary purpose is to standardize insurance practices and policies across states, helping to ensure consistent regulatory frameworks and consumer protection. Federal insurance laws are not established by the NAIC, and the NAIC does not directly regulate insurance companies. Question 75. Under a standard personal auto policy (PAP), what is typically NOT covered under the liability coverage? Part AA. Bodily injury to others caused by an accident for which the insured is legally responsible. B. Damage to another person's property resulting from an accident where the insured is at fault. C. Medical expenses for the insured and their passengers regardless of fault. D. Legal defense costs related to claims for damages caused by the insured. Correct answer: C. Medical expenses for the insured and their passengers regardless of fault. Explanation: liability coverage, Part A, under personal auto policy covers damages for bodily injury and property damage that the insured is legally responsible for in an accident. This includes legal defense costs associated with such claims. However, medical payments coverage, Part B, provides coverage for medical expenses incurred by the insured and their passengers, regardless of fault. Therefore, medical expenses for the insured and their passengers are not covered under liability coverage, Part A, but rather under medical payments coverage, Part B. Question 76. When considering a flood insurance policy under the National Flood Insurance Program (NFIP), which of the following is true? A. Flood insurance covers damages to the building and contents caused by hurricanes only. B. Coverage for basement improvements, such as carpeting and drywall, is included under the building property coverage. C. Flood insurance does not cover damage to personal property located in a basement. D. Increased cost of compliance like coverage is included automatically without any additional premium. Correct answer: C. Flood insurance does not cover damage to personal property located in a basement. Explanation: flood insurance under the NFIP provides coverage for both building property and personal property. However, personal property located in a basement is not covered under standard flood insurance policies. While the policy covers structural damage and certain elements of the building, personal property such as furnishings and appliances stored in basements typically falls outside of coverage. Increased cost of compliance like coverage is available but requires an additional premium and is not automatically included. The policy also covers damages caused by various types of flooding, not just hurricanes. Question 77. Which of the following is a characteristic of an earthquake insurance policy? A. It automatically includes coverage for all types of ground movement. B. It typically has a higher deductible compared to standard homeowners policies. C. It includes coverage for flood damage resulting from earthquakes. D. It is included as a standard endorsement on all homeowners insurance policies. Correct answer: B. It typically has a higher deductible compared to standard homeowners policies. Explanation: earthquake insurance policies generally feature higher deductibles compared to standard homeowners insurance policies. This is because earthquakes are considered high-risk events and insurers offset this risk by increasing deductibles. Earthquake policies do not automatically cover all types of ground movement or flood damage resulting from earthquakes. Such coverage would typically require separate policies or endorsements. Earthquake insurance is also not included as a standard endorsement on homeowners policies and must be purchased separately. Question 78. In a personal umbrella policy, which of the following best describes the concept of self-insured retention? A. The amount of coverage provided by the umbrella policy before the underlying insurance limits are applied. B. The amount the policyholder must pay before the umbrella policy provides coverage. C. The limit of coverage that the umbrella policy will provide for any one claim. D. The percentage of the policy limit that must be retained by the policyholder after a claim. Correct answer: B. The amount the policyholder must pay before the umbrella policy provides coverage. Explanation: the self-insured retention ECA personal umbrella policy is the amount the policyholder must pay out of pocket before the umbrella policy will start providing coverage. It acts as a deductible for the umbrella policy. This retention amount must be met through the underlying policy's coverage before the umbrella policy contributes to any additional claim amounts. The umbrella policy then covers the excess amount above this retention up to its policy limits. Question 79. Which of the following statements accurately describes the scope of coverage under a standard personal auto policy for uninsured underinsured motorist coverage? Part C. A. It covers damages to the insured's vehicle caused by an uninsured motorist. B. It provides coverage for bodily injury to the insured and passengers when the at-fault driver is uninsured or underinsured. C. It covers property damage to the insured's car caused by an underinsured motorist. D. It provides coverage for medical expenses of the insured regardless of the fault of the other driver. Correct answer: B. It provides coverage for bodily injury to the insured and passengers when the at-fault driver is uninsured or underinsured. Explanation: uninsured underinsured motorist coverage, Part C, under personal auto policy provides coverage for bodily injury sustained by the insured and their passengers when the at-fault driver is either uninsured or has insufficient coverage to pay for the damages. It does not cover damages to the insured's vehicle that is covered under collision coverage, nor does it cover medical expenses regardless of fault. Medical payments coverage addresses that. The focus is on covering bodily injuries caused by drivers who lack adequate insurance. Question 80. Which of the following scenarios best describes the purpose of personal articles flow to insurance? A. It provides additional coverage for high-value personal property items like jewelry and collectibles that are not fully covered under a standard homeowner's policy. B. It covers damage to personal property caused by natural disasters such as hurricanes and earthquakes. C. It provides liability coverage for injuries and damages caused by personal property such as the car or boat. D. It covers personal property loss or damage while the items are being transported overseas. Correct answer: A. It provides additional coverage for high-value personal property items like jewelry and collectibles that are not fully covered under a standard homeowner's policy. Explanation: a personal articles floater is designed to provide additional coverage for high-value items such as jewelry, fine art, and collectibles, which may not be fully covered under a standard homeowner's policy. This type of insurance offers broader coverage, often on an open perils basis, meaning it covers losses from all causes except those specifically excluded. It does not specifically cover damage due to natural disasters, liability for damages, or coverage for items while being transported overseas, though separate endorsements or policies may cover those situations. Question 81. In the context of insurance underwriting, which of the following best describes the principle of what most good faith? A. Both the insurer and the insured must disclose all relevant information honestly and completely to each other. B. The insurer is required to offer the most comprehensive coverage available regardless of the risk. C. The insured must disclose any pre-existing conditions that could affect the underwriting decision. D. The insurer is obligated to renew a policy even if the risk profile has changed. Correct answer: A. Both the insurer and the insured must disclose all relevant information honestly and completely to each other. Explanation: the principle of what most good faith, also known as iura mihi fide, requires both parties in an insurance contract, insurer and insured, to act with complete honesty and disclose all material information relevant to the insurance coverage. This means the insured must provide accurate details about their risk profile, and the insurer must fully inform the insured about policy terms and conditions. This principle helps ensure that both parties have a clear understanding and avoids disputes over coverage and claims. It does not obligate the insurer to offer the most comprehensive coverage, renew a policy regardless of risk changes, or specifically address pre-existing conditions. Question 82. Under Standard Dwelling Policy D1, which of the following perils is NOT typically covered? A. Fire. B. Lightning. C. Theft. D. Windstorm. Correct answer: C. Theft. Explanation: Its standard dwelling policy D1 provides coverage for specific perils listed in the policy, such as fire, lightning, and windstorm. However, theft is not typically covered under EUN policy. Theft coverage is generally available under more comprehensive policies like DEPA 2 or DEPA 3, or it can be added as an endorsement. The DEPA 1 policy is a basic form of coverage with a limited list of perils, and it usually requires additional endorsements or separate policies to cover other risks like theft. Question 83. When considering the National Flood Insurance Program (NFIP), which of the following statements about coverage for increased cost of compliance is accurate? A. CC coverage pays for the cost of elevating or relocating a building after a flood. B. CC coverage is automatically included in all flood insurance policies without additional cost. C. CC coverage provides funds for repairing damage to personal property after a flood. D. CC coverage compensates for business interruption losses due to flooding. Correct answer A. CC coverage pays for the cost of elevating or relocating a building after flood. Explanation: increased cost of compliance coverage under the NFIP helps cover the costs associated with bringing a building up to current floodplain management standards after it has been damaged by a flood. This may include elevating or relocating the building to meet new building codes. CC coverage is not automatically included in all policies. It requires an additional endorsement and does not cover personal property repair or business interruption losses. Question 84. What is the primary purpose of the fair rental value coverage under standard dwelling policy? A. To cover the cost of repairs to the rental property after a covered loss. B. To compensate the landlord for lost rental income when the property becomes uninhabitable due to a covered peril. C. To provide liability coverage for injuries occurring on rental properties. D. To cover the cost of replacing personal property lost or damaged in the rental property. Correct answer B. To compensate the landlord for lost rental income when the property becomes uninhabitable due to a covered peril. Explanation: fair rental value coverage, coverage D, under dwelling policy compensates the landlord for lost rental income if the rental property becomes uninhabitable due to a covered peril, such as a fire or severe storm. This coverage helps replace the income the landlord would have earned from renting the property. It does not cover the cost of repairs to the property, liability for injuries, or replacement of personal property inside the rental unit. Question 85. Under standard homeowners policy, which of the following is the typical exclusion for coverage of personal property? A. Damage caused by fire. B. Damage caused by vandalism. C. Damage caused by wear and tear. D. Damage caused by a falling object. Correct answer C. Damage caused by wear and tear. Explanation: homeowners policies generally cover personal property against a wide range of perils, including fire, vandalism, and falling objects. However, damage resulting from wear and tear is specifically excluded from coverage. Wear and tear refers to the gradual deterioration of property due to regular use over time, which is not considered a covered peril under standard policies. Such exclusions are in place because wear and tear is considered a maintenance issue rather than an insurable risk. Question 86. Which of the following scenarios would be covered under standard personal auto policies collision coverage? Part D. A. Damage to the insured's vehicle from hitting a deer. B. Theft of the insured's vehicle. C. Damage to the insured's vehicle from a flood. D. Damage to the insured's vehicle from a hailstorm. Correct answer A. Damage to the insured's vehicle from hitting a deer. Explanation: collision coverage, Part D, under personal auto policy covers damage to the insured's vehicle resulting from a collision with another vehicle or an object, including hitting a deer. This coverage is specifically for incidents involving impact with other objects or vehicles, regardless of fault. Theft and damage from a flood or hailstorm are covered under other types of coverage. Comprehensive coverage, Part D, addresses theft, and it also covers damage from non-collision perils such as floods and hail. Question 87. A policyholder's home is insured under a homeowner's policy with coverage set at $400,000. The covered peril causes $50,000 in damage to other structures on the property. What amount will the policy cover for the damage to other structures? A. $40,000. B. $50,000. C. $80,000. D. $100,000. Correct answer B. $50,000. Explanation: other structures coverage under standard homeowners policy typically provides coverage for structures not attached to the main dwelling, such as a detached garage or shed. This coverage is usually set at a percentage of the dwelling coverage limit, commonly 10%, For a home with a coverage limit of $400,000, this would equate to $40,000 for other structures. However, if the policyholder has a higher limit or if other structures are covered fully, the amount paid out would be $50,000 as specified for the damage incurred. Question 88. Which of the following is a primary underwriting consideration for a personal umbrella policy? A. The insured's credit score. B. The insured's underlying insurance policy limits. C. The insured's previous insurance claims history. D. The insured's geographical location. Correct answer. B. The insured's underlying insurance policy limits. Explanation. Underwriting for a personal umbrella policy primarily involves assessing the limits of the insured's underlying insurance policies, such as auto and homeowners insurance. The umbrella policy provides additional coverage above these limits, so insurers need to review the existing policy limits to determine appropriate umbrella coverage. While the insured's credit score, claims history, and geographical location may also be considered, the core underwriting focus is on ensuring that the umbrella policy provides excess coverage over the limits of the primary insurance policies. Question 89. Which of the following typically represents a named perils coverage in a dwelling policy? A. Earthquake. B. Theft. C. Flood. D. Windstorm. Correct answer. D. Windstorm. Explanation. A named perils policy provides coverage only for specific perils listed in the policy. In a dwelling policy, common named perils include windstorm, fire, and lightning. Earthquake, theft, and flood are typically not covered under a standard named perils policy unless specifically included through endorsements. Windstorm is commonly covered under named perils policies, while earthquakes and floods usually require separate endorsements or policies. Question 90. Under a standard personal auto policy, which of the following scenarios would typically trigger the underinsured motorist coverage? Part C. A. The at-fault driver has no insurance. B. The at-fault driver has insurance, but it is insufficient to cover all damages. C. The insured's vehicle is stolen. D. The insured's vehicle is damaged by a falling object. Correct answer. B. The at-fault driver has insurance, but it is insufficient to cover all damages. Explanation. Underinsured motorist coverage, Part C, is designed to provide additional coverage when the at-fault driver has insurance, but it is not enough to cover the total damages. This coverage helps to fill the gap between the at-fault driver's liability coverage and the actual amount of damage. If the at-fault driver has no insurance, uninsured motorist coverage would apply. Coverage for vehicle theft or damage from falling objects falls under different sections of the policy, such as comprehensive coverage or collision coverage.